Many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050. That means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line. We'll speak with our Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. From Bloomberg's World Headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source, and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lines from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We've got stocks moving higher. 2 hours to go before the closing bell. The Dow, the S&P, NASDAQ all advancing. What a week this has been. Stocks climbing at the end of a week that's been marked by wild market gyrations. Strong earnings out of Apple, luring dip buyers. Apple shares right now up by 6%. That is overshadowing fears that the Fed will have to act aggressively to head off the fastest inflation since the 1980s. Right now, the S&P is up 56, a gain of 1.3%. The Dow up 240, up by 0.7%. NASDAQ up 241, up 1.8%. And we have got the NASDAQ 100 index up by 1.9%. Spot gold down 0.6%, falling $10 the ounce to $17.86. West Texas Intermediate crude up 0.6%. 0.2%, 87.12 a barrel on WTI. So again, stocks are pushing higher. As for markets and the earnings outlook, Sarah Malik is Global Chief Investment Officer at Nuveen. She was interviewed this morning on Bloomberg Surveillance.
It's not going to be a year of a rising tide lifting all boats. It's going to be a volatile year. We've already seen that. But overall, we're still moderately bullish based on earnings growth.
Oil is heading for a sixth straight weekly gain. Prices trading near a 7-year high as crude marks a roaring start to 2022. Chevron, meanwhile, plans to increase Permian Basin production by about 10% this year from 2021 levels, among the biggest growth forecasts yet from any of America's top shale producers. We do have Chevron shares. They are lower today. Chevron reporting earnings this morning. Chevron shares down now by 4.3%. Among some of the other oil names, ExxonMobil down 0.3%. BP is dropping 1.7%. EOG Resources down 0.5%, and Pioneer Natural up by 0.2%. Again, crude up 0.7. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you know how everybody keeps joking, wow, what a year it's already been?
Yeah, what a week, right?
Well, what a week alone after already several crazy weeks here.
What do you say? What a year
in
this week has
2022.
been?
Yeah, exactly.
Yeah, okay, that's what it feels like.
We made it, though, folks. It is Friday, January 28th, 2022. Next week, we're going to be talking about the Friday jobs report, right?
Yeah, I can't believe that's already coming up.
So it's like all happening. So finally, it is also the best day in the new year for stocks after some wild market rides. So we're going to get to some of the weekly takeaways on the trade. We'll do that in just a moment.
Wall Street's also getting briefed by President Biden on President Biden's team on possible Russia sanctions. We're going to be talking about geopolitics.
Yeah, we're going to do that as well. Data today, U.S. employment costs climbing in 2021 by the most in 2 decades. We've got a great guest on the labor market. He says the great reshuffle is underway. We're talking about LinkedIn's COO.
Plus, the crypto company with big yields and lots of scrutiny, too. We're diving into that.
Did you say big years?
Yields.
Oh, okay, just
yields,
checking.
Yeah. Did I say years? I meant yields.
No, I'm just
We're talking 18% here, by the way.
I'm just having some fun.
All right.
And we're going to tell you about a chance to own a piece of rock and roll history, Beatles history, in fact. There's a great auction coming up this weekend.
Not as expensive as you might think.
I know.
So get your checkbook out, Carol Masser.
Yeah, okay. First up, though, let's get to the market drivers report. And let's set the Business Week agenda on TGIF. Kriti Gupta, markets correspondent at Bloomberg News, on the phone in our New York City bureau. And Vincent Norella, global macro strategist at Bloomberg News. Kriti, you do watch the markets for us minute by minute here. We made it to Friday. How do you think about this week overall and kind of how we're ending up?
I think it's been a very long week, Carol. A very, very long week, especially if you're a markets reporter like myself. What's interesting about today's rebound, and I think I spoke to a lot of traders here in the pre-market, and there was really no consensus of whether or not you would see that buy the dip mentality come in, or if you would end the week on another down day. And I think just the kind of polarization of where the market can go is really indicative of what kind of market we're really in. There isn't a clear, there is underlying growth there for you by the stock market kind of mentality anymore. The idea is the selling can continue, and the eras of going a year without a technical correction like in 2021, well, that era is over, and a bear market, a 20% correction in the S&P 500 is very much a plausible situation. Nevertheless, today you are seeing a little bit of a bounce back, but let's just hope it holds for the next 2 hours, because as we know, that's really been the trend in the last couple of days, that things change in the last couple of hours.
Yeah, and there's also just been wide swings throughout the week, not just for the NASDAQ and NASDAQ 100, but for the S&P 500 as well. Vince Signorella, come on in here and help us explain, because it does truly seem like the market has been searching for direction because of these wild swings, right? Investors don't know if it's, time to buy the dip, or if we actually have hit bottom. How have you been reading into things this week?
Well, to be honest with you, if you've been buying the dip, you've got tire marks on your face by the end of the day, more times than not, because the rallies just aren't holding. The volatility is so rich and so high. And the traders I talk to are in that situation. They see what they think are opportunities to buy the dip. They stepped in. 30 minutes later, they're bailing and underwater in positions, and it's just not been ending well. As we speak, we're just seeing a fade in the major averages from the recent rally once again. Let's see how long the fade or how deep the fade goes, but I'm not really encouraged that 2 hours from now we'll end up in the green.
All right, but are you, Vince, help me here, because I'm looking at something like the Philadelphia Stock Exchange Semiconductor Index, the SOX. It is down 20% from its high in late December. So bear market. No offense, but every time I feel like we get on air, we say everything around us has chips, and increasingly will so. So at some point, you got to look at this and say, okay, it's corrected. You know, this is not an industry that's going away.
No, I mean, there have been corrections, but one of the things I'll point out to is like everyone gets excited about the GDP report yesterday, but in large part driven by inventories. And we also saw prices at highs of 40 years.
Yeah.
So, you know, it's all well and good that inventories are rebuilt, but that's only good if you see growth going forward to eat away at those inventories in the first quarter. Look at the Michigan Sentiment Index on a quarterly basis declining radically as we've seen GDP price index climb. So as prices go higher, consumers feel less enthusiastic about their own situation. They spend less, and now we've built up inventories. If those inventory stays on the shelf at a higher cost of financing, doesn't mean the first quarter is going to be brilliant. Even though the fourth quarter looked good, we could be dragged down very easily. And the pick 5 rate hikes for the Fed, you're lucky if you get 2.
Well, I don't disagree with you, and I think about watch that German data, like watch data overseas. I think German's kind of getting close to a recession. Like this is some of what we're talking about too globally.
Yeah, but you know, at the same time, we see Apple report earnings after the bell yesterday, and as Mark Gurman told us earlier today on Quick Take Stock, this was a perfect report except for what we saw with the iPad and what we saw with Japan, Creedy. So help us understand and push to next week when we hear from other companies like Alphabet and Meta and Amazon as well.
Yeah, well, the big piece of Apple, and I love to look at Apple as this kind of proxy for consumer spending broadly, because at the end of the day, it is an iPhone, which is their primary product, of course, is a luxury item. It's a disposable income kind of related good, not to mention their stores that operate, I think, 24/7 have kind of been this proxy for foot traffic. So in a lot of ways, Apple earnings reflect a pretty strong underlying consumer, but I think respective to the broader market can't rally on positive earnings, which they are right now, but they weren't this morning. That's not a great sign for the stock market because Apple has tended to hold up the stock market going into next week. You want to see the big tech earnings reflect the same sentiment, and you want the stock market to actively recognize that and stay positive. If not, you know that there are definitely other forces in play.
But we are higher today, and it is largely because of Apple. No?
It absolutely is because of Apple, but that wasn't the case this morning. So remember, you also have this really intense selling pressure over the last couple of days. So yes, it's because of Apple, but it's not just because of Apple, because Apple's been higher all day long. The broader stock market hasn't been. So the question is, do you start to see that spillover effect in stocks that perhaps aren't related to Apple, but are getting their kind of risk sentiment cue from it?
We got to run. I would love to talk to you guys for another 10 minutes. Creedy's going to be back later on. Vince Signorella, global macro strategist at Bloomberg News. Catch him out. Catch him on Squawk, on our macro Squawk desk. You can find it by going to SQUA Go on your Launchpad.
All right, well, let's head to Washington, D.C. now for a check of the latest world and national news. Nancy Lyons is standing by. Hey there, Nance.
Thanks, Tim. President Biden is in Pittsburgh promoting the recently passed infrastructure bill. His trip comes on the same day that a busy bridge collapsed in the city, injuring 10. 3 have been sent to the hospital. Biden went to the scene to see the damage himself.
It's astounding.
The timeliness of Biden's trip is not lost on Pennsylvania's Lieutenant Governor, John Fetterman. He spoke with Bloomberg.
It just reemphasizes how critical the investments that the Biden infrastructure bill is going to make possible. And there's no more jarring of an example to drive home just how critical that bill is.
You can hear more with Lieutenant Governor Fetterman on Bloomberg Sound On tonight at 5 Wall Street time. Nearly 73 million people are under winter storm advisories as a nor'easter is heading for the East Coast this weekend. Along with snow, the storm is also expected to produce strong, heavy winds. Boston Mayor Michelle Wu says residents need to take this one seriously.
This has the potential to be a historic storm, a huge one.
Wu has declared a snow emergency and urged residents to stay at home. Another danger, the coronavirus appears to be easing. Dr. Ashish Jha, dean of Brown's School of Public Health, says in many states cases are down by nearly 25% in the past 2 weeks.
I really do believe we now have the tools to combat future surges, to get through this moment. And as this surge declines, I hope we can really start looking forward to a very different way of managing this pandemic, one that gets us our lives back in many ways.
Jha says the virus is not going away. The pressures, though, will soon subside. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Master, along with Tim Stenovic here in our Interactive Brokers studio. I'm kind of pumped today. I'm ready to kind of wrap up the week. It's been a fascinating year already in 2022 in terms of the economy, the markets, the Fed, earnings, and we're just getting started.
We are. Now I feel bad, though, because I'm going to tell you about the Omicron subvariant that spreads faster.
This is...
So you're still pumped?
No, I'm tired of
it. I'm sorry. I'm sorry. I saw this story today. I was like, okay, really, guys? Okay, so this is a story about, well, you knew it was coming, but it's an Omicron subvariant. It appears to be even more contagious than the original fast-spreading strain. This, according to UK health authorities. The vaccine booster shots, they remain an effective shield.
Which is a good thing, because we have heard from the medical community that we're going to start seeing, these variants continually seem to be much more contagious, but not as lethal, right? The fear is something really contagious and much more virulent, right?
But this is how, and look, we talked to doctors this week about this, Carol. This is how it goes.
Right. How it burns itself out eventually.
Exactly.
Right?
A virus does not want to kill its host, because if it kills its host, it can't replicate.
Right, exactly. And so this is something, and we are seeing, if you look around the world, there are some countries where the BA2 is spreading strongly, such as Denmark, where it accounts for more than half of the cases. Our own Bloomberg intelligence analyst, Sam Fazeli, saying on TV earlier, it remains to be seen how worrisome the variant is. So again, this is it. We're learning in real time about it, but it is a reminder, and as you said, Tim, everybody that seems to come on, certainly from the medical community, says, these variants are going to continue.
Yeah, we'll keep watching this one. In the meantime, let's talk about school enrollment here in New York City. It's shrunk 10% to the lowest in years because of the pandemic.
That is terrible. Low attendance rates and ever-changing COVID protocols, some of the reasons, also staff shortages. And there's a chart that's part of this. The majority of students in city public schools belong to low-income families. So it does seem like, once again, we talk about the gaps, low-income families and kids who are part of those families getting hurt the hardest. All right, you're listening to Bloomberg Business Week. Carol Master, Tim Stanovic, we're just getting started for you on this Friday. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Stocks off session highs. The S&P does remain higher, up 0.6%, up 26 points right now. This update brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Stocks advancing at the end of a week marked by intense gyrations as strong earnings out of Apple lured dip buyers. Apple shares, they're up now by 5.1%. That is overshadowing fears that the Fed's going to have to act aggressively to head off the fastest inflation since the 1980s. S&P, as I mentioned, up 0.6%. The Dow up 32, up 0.1. NASDAQ up now by 116, up 0.9. 10-year up 5/32. 10-year yield 1.78%. Spot gold lower by 0.7%, $17.84 the ounce. Bitcoin, though, up 1.9%, 36,895 on Bitcoin. And crude, West Texas Intermediate, up 0.3%, 86.89 a barrel. Caterpillar is signaling to the market that demand from China is going to decline in 2022, and supply chain snarls will persist despite machinery needs across most of the globe improving. Caterpillar shares down now by 6.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So Tim totally bummed me out by talking about the latest variant. Thank you so much.
Yeah, I'm sorry. Got to brush up on your Greek alphabet so we can, start practicing.
Funny, not funny.
Whatever the next letter is.
Lots going on, so let's get to it. And just for those of you keeping track, as we are always at Bloomberg, global cases when it comes to COVID top 366.9 million, deaths past 5.6 million, and the vaccine more than 10 billion shots administered, Tim, around the world.
Well, let's go to Dr. Ian Lustbader, clinical professor of medicine at NYU Langone Medical Center. He joins us on the phone from New York City, as he does on most Fridays. Dr. Lustbader, I want to start with what Carol and I were talking about just a couple of minutes ago, this Omicron subvariant, BA.2, appearing to be even more contagious than the original fast-spreading strain. That's according to UK health authorities. We do know, though, that vaccine booster shots remain an effective shield. How are you reading into this?
Well, we talked about the possibility of more mutations, and this Omicron variant definitely. Happy Friday, by the way, guys.
Yeah. Thank you.
Yay, we got here.
We got here. We made it. Is definitely a split off of the original Omicron, or maybe sort of co-evolved with it. The genetics are slightly different than some of the other mutations that we've seen. The good news is it appears that people who've had Omicron will be resistant to the BA.2 variant. So that's good news. It does seem to be maybe slightly more contagious, and we can talk about what that means, but certainly not more lethal. So overall, this does appear, as viruses overall tend to mutate, tend to be a little more infectious, tend to be a little less lethal, because viruses are more successful if they don't kill their host. So I don't think this is a meaningfully worrisome development, in a way not completely surprising. We're seeing some indications in California, Texas, Washington of the BA.2 strain, more common in Europe, in Denmark, and certainly in the United Kingdom. And it may replace, just as Omicron replaced Delta, the BA.2 strain may replace Omicron, but at this point it is not killing more people, and basically the same approach that we're using. Whether it's vaccines, masks are very reasonable. We have a medication, Evusheld, for immunocompromised patients, which is becoming somewhat more available. It's 2 shots. They're monoclonal antibodies. So for people who are really at risk, they should talk to their doctor about this, because that is available for prevention, not just treatment.
How are you doing? You still just a cold, or?
I'd say I'm 99% better. Yeah, voice still not 100%.
Okay.
It's interesting. We're not really seeing sort of long COVID
symptoms from Omicron, but who knows? You know, we'll have to track these things further out. I'm feeling fine. What about you? How are you doing?
I'm fine. I never had any symptoms. I had 1 million negative tests, including my PCR test, which I took on the same day that I took a rapid. That rapid came back positive.
Maybe you had it. Who knows?
Tim and I,
Dr. Lustbader thinks you had it.
I know. I don't think I had it, but I don't know. And I'm continuing to get tests, and and I'd just be careful. So, hey,
I wouldn't worry at this point.
I'm not, right? I got to just live life. We all do, but just carefully. Yeah. Hey, do you think it's a given, Ian, that we're going to get a fourth vaccine dose booster at some point?
They're offering it in Israel, and certainly for people who are really at risk, elderly, having significant problems, immunocompromised, it probably is not going to be harmful. It's very unclear. 4 doses of alpha for really Omicron or BA2, very unclear how protective it'll be and how long that protection will last. So if you're at risk for 90 days, think about things like Evusheld, which is AstraZeneca. Think about early Paxlovid. We do have that available for people who are at risk, who test positive and have mild to moderate symptoms. So there are various options available. The fourth vaccine, I think, is less well proven, certainly, than Paxlovid, which lowers hospitalization and severe illness, 80-90%. So that is certainly very reassuring.
Hey, I'm wondering, Dr. Lustbader, about masks, because we did learn that in San Francisco, they have removed an indoor mask mandate for offices and gyms. That still people have to prove that they're up to date on vaccinations and boosters. That starts February 1st. What do you think that's going to dispel for New York City, New York State, and other areas of the country?
So, again, depending on the kind of mask, how you wear it, there are so many variables that it's very hard to really get hard data, on this. I think certainly for kids in school, we do think maybe that's had a negative impact and on socialization and other areas. I think if you're overall healthy and there's no mask mandate, if you're insecure, certainly wear it. If you're someone at risk, if you're immunocompromised, if you're elderly, I would take every measure possible to reduce risk, which would include wearing a mask, even though we know they're not 100%.
All right. Well, take care. Always nice to check in with you, and stay well. Dr. Ian Lustbader, clinical professor of medicine at NYU Langone Medical Center. Just want to point out stocks are moving down. We're still up about 11 on the S&P, but way off our highs of the session, down 57 now on the Dow Jones Industrial Average. NASDAQ holding on to about a 72-point gain, but again, the trend is lower with wrapping up the day of the week, last day.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So I think it's safe to say that we all have wickedly full plates right now. And there's a story that's among the most read. I believe it's a Bloomberg exclusive. Just a reminder, too, of the full plate that Wall Street has.
Yeah, this one is by Hannah Levitt, Jenny Saran, and Catherine Doherty. It's about Wall Street briefed by the Biden team on possible Russia sanctions. We're going to be speaking to Hannah in just a few minutes, all about what's going on.
Just another thing to add to the worry list. Let's get back to the markets. Bouncing around again today. Let's check in with Charlie Pellet.
Thank you very much. Got to throw in two central banks for next week. Also, the jobs report end of the week. Indeed, lots of earnings. We're busy indeed. And here's what's going on right now. The Dow lower, S&P, NASDAQ, they are both higher. Stocks climbing at the end of a week that's been marked by intense gyrations. Strong earnings out of Apple luring in some dip buyers, overshadowing fears that the Fed will have to act aggressively to head off the fastest inflation since the 1980s. Right now, Apple is up by almost 5%. Microsoft also advancing up by 0.3%. The S&P up 14, a gain of 0.3%. The Dow down 58, drop of 0.2%. NASDAQ up 86, higher by 0.7%. 10-year up 6/32. 10-year yield right now 1.77%. Spot gold down 0.7%, 17.84 the ounce. And West Texas Intermediate crude oil down now 3 cents, 86.59 for a barrel of WTI. Medical experts, as we've been telling you, are keeping an eye on an Omicron subvariant, which can spread faster and cause a temporary increase in cases. It's been detected in places including Colorado, Europe, and Asia. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health.
It's different enough from the original Omicron so that we are a little bit worried about how well immunity cross-reacts to that virus. And it's certainly starting to spread now in the wake of that first Omicron going through the population. So all signs point that vaccine should work just as well against it. But again, it is increasing in numbers, so we're trying to monitor what disease severity will be and all those other factors to really get a sense of how much of an impact it might have.
Dr. Andrew Pekosh with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Mixed day for a lot of the vaccine stocks that we track for you on a regular basis. Pfizer, for example, up now by 0.9%. Its German partner BioNTech, its ADRs up 2.3%. AstraZeneca's ADRs down 1.5%. Moderna up by 3.8%. J&J Johnson & Johnson up now by 0.2%. Recapping the Dow lower. Right now, the Dow is down 58 points, down 0.2%. S&P up 14, up 0.3. NASDAQ holding on to a gain of 0.7. 10-year yield 1.77%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're up to date on the markets. Charlie, thank you so much. So among the most read on the Bloomberg today, it is a Bloomberg exclusive. It's about how Wall Street got a briefing from the Biden administration on possible sanctions against Russia, Tim.
Yeah, the story written by Jenny Saran, Catherine Doherty, and Hannah Levitt. Hannah joins us now. She's finance reporter at Bloomberg News. She's on the phone from New York City. Hannah, you and our colleagues right that city, Bank of America, J.P. Morgan, they're among the firms that are involved in discussions that U.S. and allies are hoping to prevent a Russian invasion of Ukraine. What did you learn and really take us into it?
Hey, you guys. Thank you for having me today.
Yeah.
Happy Friday.
Me too.
So what we heard and what we reported is that the Biden administration held discussions. We're really consulting these big banks to make sure that any sanctions wouldn't disrupt the global financial system. And so what we're looking at here is Russia is really integrated into the global financial system. So it's less, how will Citigroup be impacted or how will JP Morgan be impacted or something like that. And really more so making sure that the government understands the full range of consequences for, any actions or set of actions that they may take.
Well, and it's interesting, too, because I think you think about the global banks, and I do wonder about the relationship they have with maybe some of the different markets. What is kind of the ties between Russia and the U.S. banking industry?
Yeah, that's a great question. I mean, so like of the three biggest U.S. banks, Citigroup is the only one that even breaks out its exposure to Russia. And, you know, those assets are really just, I think it was 0.3% of its total assets. So it's not, you know, you're not talking some kind of like outsized exposure on behalf of the U.S. banks here. But that's not really the issue. It's more, you know, the interconnectedness of the financial system as a whole. And when you're looking at things like, you know, the SWIFT payment system, which is considered the nuclear option here, but if you cut off Russia from something like that, it's how does that impact, you know, the way business gets done and the way that banks facilitate that globally.
That's a really good point, especially when we, you know, you think about how all the conversations we've had about the global supply chain, and there's a global financial supply chain in terms of how things work around the world. The other thing I think about is I wonder how the banks are thinking about Europe's relationship with Russia, whether it's an economic impact if things start to break down. You know, that is Europe obviously more directly impacted than the United States in that form.
Yeah, well, definitely. And, you know, all of these big banks have global exposure. And when you're looking at, I mean, I think I was just reading that I think when Western nations threatened Russia's access to SWIFT back in 2014, one of their finance ministers said it could reduce Russia's GDP by like 5% in a year. So, you know, when you think about these consequences, you know, not just in Russia, but then spillover effects to, you know, those countries that are closer geographically, like you just mentioned, then you're looking at that question of, you know, global growth and how that impacts the banks. And also, you know, when you think about, you're talking about volatility in the markets, which this week has been, you know, crazy as it is, but then you think about, you know, if there's all this uncertainty around that, will people be on the sidelines, and just all of those implications as well.
Well, and there's the traditional big banks, right? And then there's also like a MasterCard. I know you guys cite the CEO in your story. I mean, they talk about it being a substantial and strategically important market for them.
Yeah, I mean, that really goes back to the payments thing and the payment system as a whole.
So what do banks and financial institutions do now that they've been briefed? How do they prepare for such a situation?
I mean, you know, it's a back and forth. It's not, you know, I think that the administration, my sense is, wants to learn from the banks as well, and the people whose job it is at the banks to understand the potential outcomes. So, you know, there's some back and forth there. But, you know, at the end of the day, banks have had to deal with sanctions before, and that's really the point of these conversations is for them to, you know, be able to determine the path forward, as well as the administration.
Hannah, real quickly, just got about 25 seconds. Who's more worried, the Biden administration about spillover, or banks more worried about spillover?
That's a good question. You know, that's a great question. I'll leave that to them.
To be continued. Hey, great reporting, and it's a Bloomberg exclusive, and it is among the most read on the Bloomberg in what's been a crazy, cray-cray week. Hannah Levitt, thanks so much. Finance reporter at Bloomberg News on the phone in New York City. You know, what I love about what she said, too, is just it's a reminder when we have spoken so much about the connectivity between supply chains, but the financial supply chain is so connected.
Yeah, and it's not something that you can really visualize, but it absolutely is. I mean, think about the fact that all these companies in their earnings are talking about cross-border transactions.
And we take it for granted, right, that this stuff just works so seamlessly, and that's not always the case.
Hey, let's head to Washington, D.C. for a check of the latest world and national news. There we find Nancy Lyons with an update. Hey, Nance.
Thanks, Tim. An investigation is underway into why a snow-covered bridge in Pittsburgh collapsed this morning. Allegheny County Executive Rich Fitzgerald says, fortunately, no one was killed.
Thankfully, at this point, the preliminary reports are minor injuries, or injuries that are non-life-threatening, might be a better way to say that.
Fitzgerald says the Fern Hollow Bridge is heavily used, and 3 to 4 vehicles were on it when it collapsed. President Biden is in Pittsburgh to speak about the recently passed infrastructure law, and he stopped by the scene of this morning's incident. He says shoring up bridges will be key for Pittsburgh.
I've been coming to Pittsburgh a long time, and as a former Pennsylvanian. But I didn't realize there are literally more bridges in Pittsburgh than any other city in the world.
Biden says the infrastructure law will bring gigantic change to the entire country as well. The White House is trying to keep Wall Street in the loop when it comes to tensions over Ukraine.
Sources tell Bloomberg News members of the administration held briefings this week with executives from J.P. Morgan Chase, Bank of America, Goldman Sachs, and Citigroup. It's part of an effort to ensure that sanctions on Russia don't disrupt the global financial system. The U.S. and the European Union are honing in in on a package that would target Russia's ability to convert currency. Energy penalties and access to the payment system for them are also said to be on the table, but sources tell us that's considered a nuclear option. In Washington, I'm Nathan Hager, Bloomberg Radio.
After an appeals court found the wrong sentencing guidelines were followed, a federal judge today resentenced Tiger King Joe Exotic to 20 years in prison for a murder-for-hire case. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Was that Tiger King who got?
Yeah, that's Tiger King. Well, he got a portion shaved off.
Oh, he did?
Yeah.
Okay.
Did you? It's the second time we brought up Tiger King in 2 days, I think.
What's up with that?
Well, I was talking about Netflix's stock price was back to where it was when Tiger King first came out.
I do remember all the early conversations about what everybody's doing at home, and it was like, so you watch Tiger King, or
Yeah,
have
and
you
then,
watched it?
once you get through that, okay, what's next? Oh, how about 2 more years of a pandemic? And another season of Tiger King.
I laugh because I'm going insane over it.
Well, hey, speaking of working from home, this story
Yeah.
caught our eye earlier because we talk a lot about what big financial institutions are doing in order to attract and retain talent. And a lot of companies are saying, you got to get back to work and you got to get back to the office. But Apollo is actually giving private equity staff a Work Anywhere August to be more flexible.
It's time to stock up on the sunscreen if you work for Apollo Global. Come August, the PE giant planning to allow staff in its buyout unit to work anywhere they would like for the month. This is coming from Matt Nord. He's one of the executives behind the decision. He said, in a quote, "We have seen over the last 2 years that we can give people more flexibility in how they manage, how they work, and it doesn't impact performance." He said this. He's co-head, by the way, of private equity, and he said this in an interview.
Private equity chiefs, like their peers across Wall Street, have taken an array of steps to provide employees flexibility as the pandemic persists. At Apollo, the August plan, it was also motivated, Carol, by the desire to attract and retain talent in a cutthroat job market. That factor was in part what led companies, including Amex, to offer hybrid work plans in recent months.
Well, and this is it. And this is something we can talk about later on with Dan Shapiro over at LinkedIn. He's the COO, and they're seeing some really interesting activity on their platform. The conversation comes up almost with everyone I talk to about this working from home. What does it mean? Are employers who don't provide some flexibility, they're already losing out on talent. Talent want flexibility.
Just
Not talent,
come to my
employees.
home and try to work from my home. And then you'll be like, okay, I'm getting back to the office.
I have mixed feelings about it. Like, I don't miss the commute when I work from home, but I really miss being with all my colleagues and being in studio.
It is so different being around people versus being at home. But look, I'm a different person.
But you have a little one.
I do.
It's harder.
It is.
All right. You're listening to Bloomberg Business Week. Carol Masser, Tim Stedovic. We're going to get to one of the stories in the magazine.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Last update, we told you the Dow was lower. It has reversed course. The Dow is now higher by 78 points. Another volatile day, that kind of a week. Right now, the Dow Jones Industrial Average is up by 0.2%. S&P 500 Index up 30. That is a gain of 0.7%. We're off session highs on the S&P. We've got NASDAQ up 134, up by 1%. Stocks paired gains in a week that has been marked by intense volatility and fears that the Fed will have to act aggressively to head off the fastest inflation since the 1980s. 10 years up 5/32. 10-year yield right now 1.78%. Spot gold down 0.7, 17.85 the ounce, and West Texas Intermediate crude up 0.2%, 86.82 for a barrel of WTI. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, Tim Stenovec on this Friday. And in the new issue of Bloomberg Business Week, it's out, and in it you'll find a story about one crypto company, its founder, and why regulators are keeping an eye on it.
The story by Zeke Fox, financial investigations reporter at Bloomberg News. He joins us now to talk about his story. It's about Celsius. Also joining us is Joel Weber, editor at Bloomberg Business Week. He joins us on the Access line from Brooklyn. Celsius is 18% yields on crypto. They're tempting, and they're drawing scrutiny. Joel, so is Celsius a bank? It takes your crypto. It's not regulated as a bank. What is Celsius?
Sounds great, and 18% yields definitely catch attention. And for a long time, it's been people who are willing to lend crypto to Celsius and get those returns. And increasingly, it's making some regulators take notice too. Zeke, how do you get 18% yields?
So the pitch is really compelling. It's the Celsius's founder, Alex Mashinsky. He says, listen, it's not hard to get 18% yields. It's actually the big banks are robbing you. They take your deposits. They go out and invest them. They make lots of money, but they don't give you the profits. Meanwhile, if you send your crypto to Celsius, it'll go out and invest it, and it'll pay you 5%, 8%, even 18%, depending on which crypto you send them.
Well, okay, so what do they then do with your crypto?
Yeah, I mean, that is the question. Celsius says that they have these profitable ways of using the crypto, the main one being that they can take the coins that you sent to Celsius and lend them to big traders like hedge funds who will use them to make really profitable bets. And these traders, they have trouble borrowing money elsewhere, so they're willing to pay a lot to Celsius. And Celsius can keep like a little sliver for itself and pay out the rest to the depositors.
So it sounds like a win-win. Or what are we missing?
Pretty much. I mean, when I heard the pitch, that was my question. Like, what's the catch? Because in general, if someone is paying you a high interest rate, it's because, they're taking some sort of risk with your money. And that's what I set out to investigate. Because while Celsius says it's really transparent, it doesn't give out any sort of financial statement that shows exactly what it's doing with all the money that it's collecting. And it's not regulated like a bank, even though the basic proposition is pretty similar to a bank. It's not really regulated at all. But in recent months, a bunch of state securities regulators have started looking into Celsius, and so has the Securities and Exchange Commission, which is saying that maybe by doing what it does, it's breaking the law and offering people what are essentially investment products that the SEC should be overseeing.
So Zeke, if that were to happen, if the SEC then does have to oversee these products, does that somehow ruin Celsius's business model, or could they change their business model so they adhere to regulatory, adhere to regulations?
It's a good question. I mean, they've been growing so fast. They got up to $25 billion in assets last year, more than quadrupled. I don't see why it couldn't go on with regulation, but the regulators would want to know exactly what they're doing with all the money, and they might have to disclose it to users. So I spoke with a lot of former employees of Celsius, and what I found was that the company is definitely taking some risks with this money. So if there was more transparency, it's unclear how the users would react.
So Zeke, talk to us more about Mashinsky, because he's got sort of an online, you mentioned those assets. How many people are watching him and tuning into his programming where he basically pitches his services? You mentioned those assets. How many people are watching him and tuning into his programming where he basically pitches his services?
Yeah, I mean, he's the founder, and he's like the #1 pitch man for the company. He's at every crypto conference. He live streams every week. And, I mean, just one example of something he said is the beauty of Celsius, of what Celsius managed to do, is that we deliver yield. We pay it to the people who would never be able to do it themselves. We take it from the rich, and we beat the index. That's like going to the Olympics and getting 15 medals in 15 different fields. And after he said it, he dabbed and brushed off his shoulders. And he talks like this. It sounds like he makes Celsius sound like kind of like a multi-level marketing type business opportunity more than like a bank account. But he has all these fans, like Celsius users. He calls them Celsians. He says there's more than 1 million of them. These users will write in and be like, I put my life savings in Celsius. Like, I quit my job because I'm making so much money off Celsius. And it seems like Mashinsky really feeds off this energy. And he's 56, which is old by crypto standards. And he likes to say that he calls Celsius money over IP, as if it was like the revolutionary technology voice over IP that let you send phone calls over the internet. And he likes to say that he invented voice over IP, which would make him like a really important inventor in the history of the internet. However, I looked into this. I talked with a bunch of people who worked on voice over IP, and they say Mashinsky did not invent it, that he did have an early voice over IP company, but he didn't invent the technology.
Yeah, so it makes you wonder, right, when someone has to kind of put that out there. Hey, you did talk to those that were formerly employed at that company. I mean, I guess it's a great profile and a deep dive into maybe a company people don't know about. What was your takeaway after your reporting and writing about this?
To me, I think that as a Duke professor told my co-writer Joe Light, there's no free lunch. If Celsius is paying you a lot of money, they have to be taking some risk with it to earn those returns. And maybe you trust Celsius to take your crypto and invest it, but maybe you want some more information about exactly what they're doing with the money before you decide whether to invest with them. I mean, I found that they've given at least hundreds of millions of dollars to a guy to invest in DeFi. So they were like taking the users' deposits and sticking them on these DeFi platforms. And the top money manager for DeFi left in a dispute which wasn't disclosed, and they lost a bunch of money in a hack.
Right.
So it seems like, there's some risk involved. Just let the depositor, or I guess not depositor, beware.
Right. Eyes wide open. Hey, we got to run. Zeke, thank you so much. Zeke Fox, he's financial investigations reporter at Bloomberg News. Check out his story. It's in the finance section of the new issue of Bloomberg Business Week magazine, on newsstands, on the Bloomberg, and online at bloomberg.com/businessweek. Joel Weber, have a great weekend. Editor of Bloomberg Business Week. Catch Joel, me, and Tim. We're on the weekend show of Bloomberg Business Week. You can catch that on Bloomberg Radio at 8 a.m. come Saturday. This is Bloomberg Radio.
Countdown to the Close, Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes left in your trading day, your trading week. Caroline Hyde, Romain Bostic, Shonali Basak, joined now by our colleagues Carol Massa, Tim Stenovic. As we roll towards this market close, TV, radio, YouTube, what an extraordinary week. And we managed to end on a high, Carol.
Yeah, so far, right? Fingers crossed to see whether or not, for all those bulls out there, whether or not we end that way. What a crazy day, though, when you see a lot of names still under some pressure. A name like Robinhood is up about 8%. I have to say, I've been focusing, though, on the semiconductor area. Philadelphia SOX semiconductor index is down about 6% so far this week. So we've seen a lot of pressure. Thank you, Intel, largely for a lot of the selling, Tim, that we've seen this week.
Yeah, I'm keeping an eye on breadth because I noticed that taking a look at the S&P 500, only 41.6% of stocks in the S&P 500 are actually above their 200-day moving average. So some context, the last time we were at a level that low was July of 2020. So it's been quite some time.
So many technical levels that I'm sure Romain's going to talk us through as well. We're looking at, though, a bounce back a little bit off the lows of the day. The S&P 500 now up 1.1%, 50 points higher to end the day. 208 points higher on the NASDAQ. We're up 1.5%, but remember, we're still underwater for the week. The S&P 500 higher, Dow Jones also higher by 0.6%, but the Russell 2000, you're laggard on the week and on the day off by 0.1%, worrying about those small caps.
Yeah, and of course, for those active investors, the excitement is in the divergence in the sectors. The S&P 500, we have food and retail leading the sector. Lower on the day, energy 1.7% lower, the lowest of all the sectors. Materials also lower. We have some that are higher though. Infotech, real estate, communication services, all higher on the day.
All right, obviously what's leading this market right now and pretty much the main buoy are some of those big tech stocks. Obviously Apple getting one of the more important bids, a more meaningful bids here, up 5.5%, biggest contributor right now to some of the gains that we're seeing out there. But of course, you're talking about a stock that's coming off of 8 straight days of losses and really well below that sort of $3 trillion level that we were all trumpeting just a few weeks ago. Keep an eye on the payment stocks because we've actually heard some relatively encouraging news about consumer spending despite the government data that we got. We heard it from Visa, we heard it from MasterCard, we heard it from American Express. On the flip side of that, you have Synchrony Financial, which is much more tethered to personal loans and auto loans. Some of the volumes there that we saw in the most recent quarter, that's disappointing a little bit. Those shares down 8%, Visa shares higher by 9%, and the material stocks, Freeport McMoran, moving lower right now, down 4%, down for a 7th straight day.
And I love that you weave in the earnings narrative among this, because here's the bull case, right? Yes, we are seeing a significant sell-off in stocks. I show to our radio audience a great chart that's really showing how the S&P 500 has, of course, pulled back from its highs in correction territory at one point this week. However, analysts are still pretty bullish when it comes to earnings among the stocks. And that's kind of what you're hearing from plenty of analysts out there. Barclays strategists saying, look, the fourth quarter earnings look reassuring. UBS Asset Management looking at this route being valuation-centric, not about a worry in global growth, not about a worry in terms of where these companies are going.
Well, and that's fundamentals, right, Caroline? Like what we're hearing from analysts and estimates when it comes to earnings growth going forward. We're also counting on what we hear from the CEOs of so many of these different companies. Mondelez, our team catching up.
That's Oreos, right?
Did I say it right?
Yeah, you did. Have you not heard of Oreos?
Is that what? That was just.
I mean, I know things are different in
Oreos.
Oreos.
About dessert tonight.
You know, here in New York.
Oreos and a glass of milk. There's nothing like it. All right, Mondelez, the CEO, Dirk Van de Put, excuse me, coming out really talking about higher prices and the impact it's having on the company, but also on the consumer. Felt like he was pretty optimistic. Check it out.
Price increases have not had a lot of effect on volumes. Consumers feel financially pretty good. They've also changed their spending, less discretionary spending, less travel, less eating out, and more importance to the home life. And so they're prepared to spend more on what they are consuming at home.
Right. All right. So, of course, that's Dirk Van de Put, the CEO of Mondelez. So people are buying couches, they're buying Oreos, they're buying things like that. But I think it's an interesting soundbite, especially on a day when we got a bunch of economic news that looked at employment costs, but also showed some consumer spending pulling back.
Well, I thought it was interesting, too, in that interview, and we didn't play that clip from it, but he also talked about the idea that consumers are only going to be so willing to take some of these price increases. And the idea that we've had so much consumer confidence, partly fueled by looser financial conditions, by looser Fed policy, and whether that goes away as we get deeper into this year.
I also wonder, back to what he said in that clip, Romain, less discretionary, less spending on travel, less eating out. is that temporary, or is that a permanent shift that we see? Because I still, I still am under the understanding that this is a temporary shift in the way that consumers are spending money, and then eventually that people will get out there like we saw them do last summer and even the summer before that, and spend that money on traveling and spend that money eating out.
The demand is there, and that's what we keep hearing again and again, but is the supply chain there? Apple managing to navigate it with aplomb, but then you're looking at Caterpillar of this world saying, look, we want to be making more, we can't because of the supply chain issues. We're about to have President Biden, of course, take to the stage over in Pittsburgh, talking about those supply chain headaches that still feel so prevalent right now, Shonali.
Yeah, it's so interesting because is the environment we're looking at now, the way we were talking about consumer spending, going to be the same as the way we talk about it in 3 months?
Yeah.
And if interest rates start rising, people are not going to be levering up and wanting to spend on their credit cards.
Well, what are they spending on, though? I mean, that's the question. I mean, I think when we looked at some of that credit card data, it seemed to show that it was kind of this rotation, if you will, with regards to consumer spending, moving from certain types of items to another. But at what point does that sort of become, what is it, the old musical chairs where they take the chair away and at some point you're only going to spend on, Clorox wipes and Oreos?
Well, I think what's really important is generally, do consumers continue to spend in some way, whether it's travel, whether it's on things? Is the economy strong enough? Is there enough wage growth to continue that supports some kind of spending going forward and continues to support Caroline economic growth, which will ultimately support earnings growth?
Did you know there's a bomb cyclone heading our way?
Is everyone spending on picks and shovels?
Are we going to be trapped in the office? I think Delta's already canceling flights.
As long as you have Oreos at home, we'll be fine, right?
We have some upstairs on the 6th floor.
Romaine's got a new puppy to be worrying about this
no
weekend.
dog food to worry about, puppy inflation.
It's now our second mascot on the show.
But you're spending on puppies. We have a new puppy too, right? Like we're spending on a variety.
Okay, so you know the pain.
It's eating into my entire wallet.
They're not just for snowstorms, peeps. They're for life.
3 new puppies out of 5, so we've got to work on Tim and
what's
Caroline.
Tim doing?
I don't know.
Yeah, we've got
spending money on a
2-year-olds.
child.
Neither of us
Caroline and I, we're in the same boat with
the two with little babies.
You will keep spending. You will keep spending. All right, folks, we're going to be back in less than an hour's time for Beyond the Bell, our cross-platform coverage on radio, TV, and YouTube. We're going to count you down to the bell, wrap up what's been a really interesting and crazy week.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Am I on?
I hear you now.
Okay, I'm on. Push the button. It's Friday. Crazy, crazy, crazy week. What's interesting is we're living in a time where there's still a lot to be determined, TBD, right? People say that we're going to have economics growth. We're going to have earnings growth. It might not be as strong as we've seen, certainly as a result of the bounce back of the pandemic. It's just tricky.
It's really tricky, and that's why it's so important, Carol, to hear what these companies are saying, like MasterCard, like Visa, like American Express, like the banks we heard from just a couple of weeks ago, because they have such a good understanding of the consumer, of cross-border transactions.
Minute by minute, like they see it as it's happening, right?
Another company that has a good handle on the U.S. consumer is Amazon, and we're going to hear from Amazon after the bell on February 3rd, so that's next week.
That's a really good point in terms of what we're seeing. And it goes back to one of the things that really stood out for me with Jay Powell, and maybe we'll talk about this with the gang a little bit later on, was the Fed's need to be nimble, and in terms of the commitment we got from Jay Powell and the FOMC, they do anticipate a rate hike come March. Every meeting is live. But just because it's live doesn't mean they're going to raise rates, because we're seeing many on Wall Street ratcheting up their expectations that we're going to get a rate increase. Bank of America, every meeting, every FOMC meeting this year.
I know we're talking about something serious, but did you take the news quiz yet? We're talking about the Bloomberg Terminal News Quiz. I didn't do great because
I got 3 wrong.
I did. I should have gotten 2 wrong, but the word nimble reminded me of that. And if you have the Bloomberg, just type in Quiz Go. Take that news quiz. See if you can beat the folks at your firm and beat Carol. You won't know if you beat me.
You got Bitcoin right?
Yeah, of course. I clicked anonymous, though, so you won't know how I did.
In Singapore, I got that wrong. The Monetary Authority in this Asian nation announced surprise tightening.
I made a mistake on one of them because I just went with the first letter. I tried to do it quickly. I said Microsoft instead of Netflix, but you knew what I had.
Did you get the UK politics one?
No, I didn't get that one right.
Sue Gray, I missed that one. All right, let's get to world and national news. Nancy Lyons, did you do the quiz?
I haven't done the quiz.
Well, now you know all the answers, Nancy.
I do know the answers. Thank you very much. Well, war is not inevitable in the standoff with Russia over Ukraine. That was the message today from Defense Secretary Lloyd Austin. He says even though more than 100,000 Russian troops are amassed along the Ukraine border, diplomacy is still the preferred solution.
Well, we don't believe that President Putin has made a final decision to use these forces against Ukraine. He clearly now has that capability.
Austin says at this point the U.S. has no intention of putting offensive forces in Ukraine. Well, President Biden is in Pittsburgh this afternoon, and he did visit the scene of a bridge collapse that happened just hours before his previously scheduled trip today. He is promoting his infrastructure package. Biden says the law aims to prevent just such disasters by shoring up the nation's bridges.
They're going to fix them all. Not a joke. This is going to be a gigantic change, and there's 43,000 nationwide.
Biden applauded efforts by first responders. No one was killed in today's incident, but 10 people were injured. A funeral was held today at New York St. Patrick's Cathedral for NYPD officer Jason Rivera. The rookie officer was shot and killed while responding to a domestic disturbance last week. His brother Jeffrey spoke at today's service.
My brother was dedication. He was the definition of integrity. He was joy. My brother could light up this whole church.
Rivera's partner, Officer Wilbert Mora, also died from injuries he sustained in the incident. His memorial will be held next week. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, Tim Stenovic in our Interactive Brokers studio. So we're watching, obviously, traditional markets, financial markets. We watch what's going on in the world of crypto. And a story on the Bloomberg that talks about Goldman weighing in on crypto going much more mainstream. And they're saying...
Yeah, this is really, really interesting because it's kind of bucks the conventional wisdom. So Goldman says that investors should be skeptical of the narrative that rising adoption of cryptocurrencies must translate into higher prices. That's according to Goldman Sachs.
So they say as tokens like Bitcoin gained wider mainstream appeal in the past couple of years, their correlation with other macro assets has increased to where crypto is now at the center of recent rotations across asset classes. This is from a pair of Goldman strategists. They put out a note published yesterday that flies in the face of cryptocurrencies as an ideal tool for diversification. Let me just take on a quote from them. The price of Bitcoin appears positively correlated with proxies for consumer price risk like break-even inflation and crude oil prices, as well as, quote, frontier technology stocks, and negatively correlated with real interest rates and the U.S. dollar, they said.
Okay, so some other interesting commentary that these strategists said, quote, over time, further development of blockchain technology, including applications in the metaverse, may provide secular tailwind to valuations for certain digital assets, but these assets will not be immune to macro forces, including central bank monetary tightening.
So their point is people have pitched crypto as meaning maybe a way to diversify, right, your portfolio, and they're noting the correlation between crypto and other assets, and so maybe it's not such a great diversification tool, right?
Well, at the same, that's exactly right, Carol. And there's also, you know, what we've seen, how this correlation has shifted with the risk-off appetite that we've seen in recent weeks, because it was just November of last year when Bitcoin hit its record high of around $68,000 per coin. It shed about half that value since then. But you know what else has shed a lot of value?
What?
The stock market.
That's true, right? We've seen technical corrections and even a bear market, depending on some ways of dicing and slicing the markets. All right, you're listening to Bloomberg Business Week, our weekly crypto segment that's coming up just around the bend, right here on Bloomberg Radio. This is Bloomberg.
24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are climbing at the end of another turbulent week. We've got stocks, the Dow, the S&P, NASDAQ at or near session highs right now. Let's find out what's happening as we head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are trading higher after a weak start. Dow is currently up 204 points. S&P's gained 49, while the NASDAQ is higher by 212. The U.S. 10-year yield at 1.78%. Gold is down 10. Oil is in the green. And Bitcoin is up by 3%. Among the main 11 S&P sectors, leaders were tech, real estate, and telecom. Energy was under pressure. And leaders to the upside in the Dow, Visa, and Merck, while Caterpillar fell 6.3% after earnings and led to the downside. Also after earnings, Robinhood is now up 8%. It was down 14%. And in other news, the U.S. may ban trade of new Russian sovereign debt. And Austin said that the U.S. remains committed to helping Ukraine defend itself. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. Have a great weekend. And to hear live breaking news over your Bloomberg, type Squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We just talked about Goldman saying that investors should be skeptical of the narrative that rising adoption of cryptocurrencies must translate into higher prices. Tim, we have that going on, and it's kind of good to keep that in mind when we heard, what was it, about a week ago, the Fed taking a key step in weighing the creation of its own digital currency, a move that the Fed said could help ensure the U.S. dollar's dominance as the central bank grapples really with the fast-growing private crypto markets and coins issued by other nations, right? There's this whole thing going on globally.
Yeah, let's talk about it with Dorothy Giobbe. She's of counsel at Jones Day. She joins us on the phone from New York City. Dorothy, how are you?
Hi, Carol, Tim. Thanks very much for having me on.
Great to have you.
Yeah, really great to have you here. Let's talk about the Fed considering a central bank digital currency. What are some, I want to start with the pros here, because this is something that you look at closely. You have a good understanding of this. Why would the central bank want to do this?
Yeah, Tim, it's a great question. And so as you mentioned, the Fed has come out with this report last week, and it's going to be examining specific use cases and, both the benefits and the challenges of issuing a central bank digital currency. I think that the pros or the potential pros of the CBDC, central bank digital currency, really depend on the particular use case, the way in which the CBDC could be used in a given set of circumstances. So some potential benefits could be the greater efficiency in payment systems, more efficiencies in cross-border payments, better tools to fight financial crime, and also the potential, again, for greater financial inclusion. Those are some of the benefits or the potential pros of a CBDC. I think, what the Fed is doing now is examining these potential use cases and trying to think through whether a CBDC is the right tool to realize some of those issues.
So what would a CBDC do to the average Joe and Jane on Main Street?
Well, again, there are a couple of different models of a CBDC. So one could be institutional only, and so that would be for use between, payments between financial institutions. So not much impact to the average consumer on the street there. Any efficiencies there would be realized really between the institutions. Now, if there were a retail CBDC or one in which the public could participate, that could again have the potential for greater financial inclusion. So, for example, people might be less likely to go and cash their check with, and pay high fees for payday lenders or other, payment services, and the potential for those kinds of benefits to the consumer population, I think, is one of the things that the Fed is looking at in thinking about CBDCs. I will say it's a very important time because as the Fed has put out this report, they have put out a call for input from the public, from elected officials, from other stakeholders. And so to the extent that people have a view or an interest or a voice in this discussion, now is the time to get involved. Now is the time to make your views known to the Federal Reserve. They've opened this period for comment, and so people with an interest here should take advantage of that. The comments are, the Fed is going to be asking for comments by May.
Hey, Dorothy, I'm wondering, because you spend so much time in this space, what do you think the right move is from the Fed? If you were advising the Fed.
Yeah, I think the Fed is doing exactly what it should do. It is taking its time. The Fed is certainly not the first in this process. There are other countries and other central banks around the world who have been looking at this, the issue of central bank digital currency and are further along the road, than the U.S. is. But I think the Fed is acting appropriately. They are being very deliberative. They're being very careful. And trying to gain a broad consensus. The intent is not for the Fed to sort of act unilaterally here. And in fact, they've said that they will not move forward without broad consensus and broad buy-in from the public, elected officials, and other stakeholders. And so that's the right move. I think, they, as others have said, and I agree with, they don't have to be the first, but they just don't want to be the last.
Well, and that's the point, right? I mean, there's no kind of ignoring or looking back. You have to look forward at this point because other nations are moving forward. And I think about something like China, right? The U.S. has to keep up.
Well, that's right. China is a very interesting example. They are well down the road to the digital yuan, and have a pilot and have been, made a lot of progress there. Another interesting example is Sweden. And Sweden's interesting because the percentage of transactions that actually use cash, physical cash, is much lower than it has been in the past. That's not, there aren't the same parallels with the decline in the use of cash. It doesn't translate exactly here to the U.S. So different countries have different motivations for looking at this, looking at the issue of CBDCs and what the potential benefits might be. But I do think the Fed is taking the right course here in being very deliberative and really looking at all of the issues for what could be a very significant impact and change to our financial system and our financial infrastructure.
All right. Well, great to get your input and add it to the narrative that we've been having in the conversation. Dorothy, thank you so much. Dorothy Giobi, she's of counsel at Jones Day on the phone in New York City. Interesting, right?
Really interesting stuff. Don't want to be the first. Don't need to be the first, but don't want to be the last.
Right, exactly. All right, you're listening to Bloomberg Business Week. It's Friday, and this is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. Coming up, we're going to catch up with Kriti Gupta, markets correspondent here at Bloomberg.
Are you hungry?
I am kind of always hungry at this time.
You want a grilled cheese?
I would love a grilled cheese.
Okay.
Do you like grilled cheese?
Love grilled cheese.
What's not to love,
You know
right?
what's so great about, I know I talk about my kid a lot, but
Mm-hmm.
like, you know, I didn't eat grilled cheese for a long time, and then I have a toddler, and I'm like, oh, another excuse to feed him grilled cheese, and I'll eat half.
They're like the perfect sandwich.
They're perfect.
All right, we're going to talk about grilled cheese and a few other things in just a moment. First up, though, let's get back to the trading day. Getting ready to wrap up the week, Charlie.
Indeed, getting ready for a side of mashed potatoes to go with that grilled cheese. Not, according to Carol Nassar. The Dow, the S&P, NASDAQ all advancing right now. S&P up 51, gain there of 1.2%. The Dow higher by 228, up 0.7%. NASDAQ up 212, up 1.6%. At near close to session highs, 28 minutes to go ahead of the bell. Right now, we have got the 10-year up 8.30 seconds, 10-year yield 1.77%. Spot gold down $8 the ounce, down 0.5%, 17.88 West Texas Intermediate crude up 0.4%, 86.91 a barrel. Stocks higher at the end of a week that has been marked by intense gyrations. What a week. Strong earnings last night from Apple, luring in dip buyers today. Apple shares surging now by 6%. Just getting word that New York COVID patients hospitalized have declined by 560 to 8,181. Iceland's government will gradually remove coronavirus prevention measures, aiming to end all curbs within 6 to 8 weeks. The North Atlantic nation is following similar plans of its larger Nordic peers, which are brushing off record infections amid declining hospitalizations. So when might we see an easing of mask requirements in the United States? Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health.
Even though Omicron is a very different type of variant from the vaccines are working against that severe disease. And combine vaccination with the large number of infections that we've had, the immunity in the population is going to be quite extensive, and that should really make a big impact in terms of severe disease. And once we know severe disease is under control, that's when we can start thinking about releasing some of these public health interventions and moving back to some level of normalcy.
And again, that is Dr. Pekosh with Johns Hopkins Bloomberg School of Public Health. We have got the Dow, the S&P, NASDAQ all higher. Briefly, those vaccine stocks trading mix for the most part higher. Pfizer up 1.3%. BioNTech, the ADRs up now by 3.2%. AstraZeneca down 0.8%. Moderna out of Cambridge, Massachusetts up 5.9%. J&J Johnson & Johnson up by 0.3%. Recapping, S&P up 67, a gain of 1.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, it's time now for Kriti Gupta, markets correspondent here at Bloomberg, to join us. She's with us on the phone from New York City today, and as she does each and every day at this time, she joins us with her chart of the day. If you want to sign up for Kriti's chart of the day, you can do that at kgupta129@bloomberg.net. Also, be sure to check out her Twitter and her Instagram. You can follow her on both of those platforms at Kriti Gupta News. Okay, we've talked enough, Kriti, about grilled cheese. Why is that?
No, we decided we never can talk enough.
Yeah,
or
we can.
eat
Well,
enough.
I mean,
grilled cheese.
okay, so maybe our listeners have decided we've talked enough about grilled cheese without actually eating it. Why is that the costliness of grilled cheese the title to your chart of the day?
Yeah, well, I decided to channel Carol Nassar today in that in every single chart of the day segment I do, she asks me, why do we care? Why does it matter? And I, of course, have been obsessed with the whole Russia-Ukraine conflict, what's going on. But it's a fair question to say, why does it matter something that's happening an ocean away, thousands of miles away? Well, it matters to the average American because of the price of grilled cheese. Let me paint you a commodities picture here. When we think about the Russia-Ukraine conflict, I think the most immediate kind of price surge that comes to mind is going to be oil prices, natural gas prices, kind of the heating homes in Europe that a lot of people are talking about. But a little known fact is that Russia is also a major wheat exporter and a major aluminum exporter as well. Together, Russia and Ukraine combined make up about a quarter of the world's grain exports, which is pretty significant when you talk about the impact on bread prices specifically, which brings me to the whole grilled cheese thing, because that's my favorite bread product.
Yes.
The idea that if you start to see higher wheat prices, which you have, by the way, and higher aluminum prices, that's going to feed into things like bread prices and car prices in particular. So the Bloomberg Commodity Spot Index has actually hit a record all-time high, and it hit another record high back in October, but it surpassed that peak because of this Russia-Ukraine conflict now, and a lot of that has been driven by these increases in oil, natural gas, wheat, and aluminum, and that's something that you could see reflected in your grocery bill in a couple of months.
I feel like Yoda to your Luke Skywalker. I'm so proud of you. No, it's like such a great, right? No, but right, I always think about that because we talk about so many different things here, and I think there's folks who are listening sometimes and like, this has nothing to do with me. It's so far away. But you really connected the dots, and and why something can all of a sudden impact many Americans very quickly.
Yeah, absolutely. And I think this is, one of my favorite things about looking at commodities is because trade flows in particular, they really do kind of transcend geographies, transcend oceans, and especially with these supply chain constraints. It's fascinating to see how many things happening abroad actually affect just things that are right here at home in the United States.
And you've also got us both very, very hungry now for grilled cheese. What kind of cheese do you like? I like to use Gruyere. What do you guys use?
I use pepper jack.
Pepper jack. How about you, Creedy?
Pepper jack for me too.
Oh, nice. All right.
Nice.
Grilled cheese party. Grilled cheese party.
Exotic with pepper jack, and then Carol said whatever cheese you said. And
Yes.
Gruyere.
Don't forget that Carol's fancy, Katie. Okay.
I was going to say
she's very fancy.
Gruyere is like magical.
Yeah.
What else is on your radar?
Yeah, and Katie, I know you're watching a story that actually is really directly related to rising prices. So take us into it.
Yeah, so we talked about commodity prices, right? Let's talk about the other piece of the equation, which is going to be labor costs. You actually got some data today. This is the Employment Cost Index. It essentially tells you if you wrap in all those benefits that employers have and salaries, how much is labor costing a lot of companies. So they have this in this very handy-dandy index. And that actually posted the largest annual gain in 2 decades. There's a Bloomberg story on the terminal by our colleagues Reed Pickert and Olivia Rockman, really outlining why this is so important. It even got Bloomberg Economics to actually say 50 basis point rate hike in March is 100% on the table because of these labor costs.
That's a big deal.
50 basis points on the table.
It's not, to be specific, it's not their base case, but it is a possibility.
I would eat mashed potatoes again. I would have to.
Well,
if
you
that's
didn't
if we
on
get
Monday,
a half. I
so
know. Well, nobody brought them to me, and so you think I'm going to go out and spend money on mashed potatoes that I don't like to eat? I'm not going to do it. Creedy, really smart, especially with the backdrop of we're talking so much about inflation and looking at what's going on overseas with Russia. So really, really relevant to what's going on. Creedy Gupta, thank you so much. Markets correspondent at Bloomberg News on the phone from New York City. I have this feeling we're all going to be making grilled cheese over the weekend.
Yeah, sounds good. Snowstorm's perfect for that. Hey, let's go to Washington, D.C. Check in with Nancy Lyons there with World and National. Hey, Nance.
I'm another pepper jack person.
Nice.
Winter storm watches and warnings are popping up from North Carolina to Massachusetts as a major winter storm starts to roll into the East Coast. New Jersey Governor Phil Murphy says he's declaring a state of emergency that takes effect at 5 p.m. Wall Street time.
This one is a big one. We could be wrong, but I don't think we are wrong. I think the confidence from the National Weather Service in the forecasting is very high on this.
Murphy says they're hoping for the best, but preparing for the worst. He's urging all New Jersey residents to stay at home. A bill that once enjoyed bipartisan support and had a chance to sail through Congress now faces pushback from Republican lawmakers.
The bill is considered a high priority. It aims to bolster competitiveness with China and help with domestic production of semiconductors. But House Republicans have come out against it, saying that too much of the measure focuses on climate change and not enough to stronger export controls to protect U.S. technology. Sources tell Bloomberg that Commerce Secretary Gina Raimondo is calling GOP lawmakers and lobbying them to vote for the bill or at the very least not publicly oppose it. In Washington, I'm Amy Morris, Bloomberg Radio.
Kia is recalling more than 410,000 vehicles in the U.S. to fix a problem that can stop the airbags from inflating in a crash. The recall covers certain Forte small cars from 2017 and 2018 model years and Sedona minivans and Soul small SUVs from 2017 through 2019. The electric Soul is also included. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Massar, Tim Stanovic, we're in our Interactive Broker studio right here on Bloomberg Business Week. So we've got a story on a worst move and one of the worst major IPOs since the pandemic.
Yeah, let's talk about Robinhood first, and then we'll talk a little bit about what Goldman Sachs is telling its wealthy clients. Robinhood, it's higher today, despite the fact that it fell as much as 14% earlier in the day. You're shaking your head, you're shrugging.
It's a wacky trade.
It is a wacky trade. I had no idea what's going on. You know, Julie Sheriel from Bloomberg Intelligence joined us on Quick Take
What'd she
stock
say?
earlier today. She said, hey, this stock has been beaten up. And,
yeah.
And that's actually what the story is about. And perhaps that's why people are buying into it. They're like, okay, well, enough is enough.
24 percentage point swing. It's been up as much as 11% today. It's been down as much as 14%.
Unreal.
That's a lot.
Yeah, that's unreal.
All right, so one of the worst major IPOs since the pandemic. In the meantime, let's get to this story just came up on your radar about Goldman.
Yeah, this is a story about Goldman Sachs warning its customers that the worst move that its wealthy clients could make is for them to dump stocks. Goldman Sachs is saying that equities are still the best game in town despite this week's market decline, reminding me, Carol, of something that you say and you ask our guests all the time about whether there is an alternative.
Tina. Hank
They say
Smith,
no.
Haverford, right?
Yeah.
That's what he said. What are you going to do? Put it into the treasury market? And in terms of the alternative equities, as you said, still the best game in town. And that's because stock valuations are nowhere near where they were at the height of the dot-com bubble 2 decades ago. It's worth saying once again. This is from the head of the bank's investment strategy group. Unlike in the late 90s, the U.S. equity market today has broad-based returns and its corporate earnings are fundamentally strong. This is from Sharman Mosavar Rahmani. And, I feel like this does to some extent, Tim, mirror what we've heard from our own Gina Martin Adams. Like, we're seeing earnings grow.
We are.
And I think she even talked about, was it 15% or 20% type of earnings growth? I think 15% or so. And there is the chance for outperformance
There
this
is.
year.
We got to look at it past the index level because only 5 companies, including Apple, Amazon, and more,
terms of
account for
over-
about a quarter of market cap of the S&P 500.
All right, yeah. But
Concentration risk is high.
That's fair.
Some would
that's
say.
fair. All right. It's a good story. Check it out at Bloomberg.com. This is Bloomberg.
24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Late day rally, and it is possible, check your Bloombergs, that we could see an up week. Right now on the week, the S&P is up by 0.1%. The Dow, the S&P, NASDAQ, late day rally right now. S&P rallying 1.83%. Stocks are climbing at the end of a wild week that's been marked by intense gyrations. Strong earnings from Apple luring in dip buyers. Apple shares up now by 6.5%. But to be sure, the Dow, the S&P, NASDAQ, they're all rallying into the close. NASDAQ up now by 314 points, up 2.4%. The Dow up 393, best level there, up by 1.1%. And again, to underscore, S&P 500 index on track for a winning week after 3 losing weeks. Last week, you recall, the S&P dropped 5.7%. 10-year yield 1.77%. Spot gold down 0.5%, 17.88 the ounce. West Texas Intermediate crude up 0.6%, 87.15 a barrel. Briefly after earnings, Caterpillar shares cap lower now by 5.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg editorial board. This week, the Federal Reserve announced that it will soon be appropriate to start raising interest rates. That wasn't a surprise. The Fed had been foreshadowing it for a while, yet markets greeted the news nervously. How come? The problem is that the Fed's new policy is still a long way from normal for an economy running at or above capacity. Investors know that if higher inflation persists, getting it under control will take more than a few quarter-point interest rate hikes. But a more forceful throttling of monetary policy threatens serious collateral damage to the economy. For now, the central bank's approach looks right. But the Fed should keep watching the data with an open mind and be ready to change course if circumstances demand. This editorial was written by the Bloomberg editorial board. For more Bloomberg opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Just got about 10 minutes left in today's trading session, getting ready to wrap up the trading day. We are seeing buying into the close. We are at our best levels of the session. More than 2% gain on the S&P, as Charlie mentioned, 2.7% higher on the NASDAQ. Thank you, Apple, but also a lot of other names. And the Dow right now up about 1.5%, Tim. So we're definitely seeing bullishness into the closing bell here.
Yeah, certainly. Thank you, Apple. And you're right to say a lot of other names because of the more than 500 stocks, because there are more than 500 in the S&P 500. 426 or higher, only 77 lower right now. Quite a change from what we saw earlier in the day.
That's an interesting tone and sentiment going into the weekend. So let's see what our next guest has to say. Dave Donabedian, he is Chief Investment Officer of CIBC Private Wealth Management. They've got about $96 billion in assets under management. He joins us once again on the phone from Baltimore. So, Dave, it has been quite a week in a year where we have kind of had quite a week after week after week. To see potentially a positive close on this Friday in a week where we had the Fed meeting and a lot of volatility in the markets and also some big earnings, how do you read it?
Well, I think it's certainly good to see a strong bid to close the week here as the S&P kind of struggles to a draw for the week. I think certainly the Apple earnings report, sort of the bellwether of bellwethers reporting so strong helps, and perhaps some short covering going on. So, but still, a tough start to the year.
Okay, so you're not saying necessarily that it's a bullish sign that the sentiment is changing.
No, I don't think yet. I think we're in a back and forth market here. We've had a pretty meaningful pullback, which I think makes some sense. If you look at the drivers of the great bull market rally that we had in 2020 and 2021, when the market more than doubled, we had these, three incredibly strong tailwinds: monetary policy, fiscal policy, and a huge earnings recovery. And those tailwinds are evaporating, right? The Fed is marching toward rate hikes. There's not going to be any more fiscal relief packages coming. And earnings are coming in fine here on the fourth quarter reports, but we know they're going to slow this year. So those tailwinds just aren't as strong, and we started from a level of fairly high valuation. So a bit of a pullback is not terribly surprising.
You sound like somebody who's seen a fair amount of market cycles and understand the market goes up and the market goes down. And we all love to, who've seen a fair amount of market cycles, like to make comparisons to other moments of either volatility or instability or big selling or big buying. How do you kind of put this market cycle in perspective to some of the other past market cycles that we've seen? Or are we still in this market cycle? I know we've had technically corrections, but how do you see it?
I think what you look for in terms of a cycle comparisons is, because it's very relevant to where we're headed, how do markets behave when the Fed pivots from very easy to less easy, right? When they go from a period of very low interest rates to saying we actually need to start to tighten. And we learn a couple of things from history. First, markets are more volatile in general, both stock and bond markets, and we certainly are seeing that already. The record for the equity market, though, is that it does reasonably well during the early phase of Fed rate tightening. You've heard the old adage, it's not the first Fed hike to worry about, it's the last one. There's a lot of truth to that, and the numbers bear it out. So the Fed doing an interest rate hike, or even a few this year, does not mean that we're headed for a bear market in the short term. We actually think the bull market gets knocked around a lot this year, but survives, mainly because we're going to continue to have economic growth and decent earnings growth. But corrections are just going to be a part of the landscape, which they, of course, were not last year.
Dave, how do we know when we hit the bottom in one of these corrections, if the sell-off continues after this week?
Honestly, I mean, the truth is you never know when the absolute bottom is. I think what you have to do as a stock picker is have your candidate list, companies you'd love to own for the next 3 to 5 years, and the price at which it makes sense to own them. And one of the things that happens when you get these market pullbacks is stocks you didn't think you'd be able to buy at the right price, suddenly you can. So I think it makes sense for investors to be opportunistic. And I guess I would say if sentiment gets too bearish, literally where people are starting to price in a bear market, that isn't a buying opportunity, because I don't think that's how things are going to transpire.
Yeah, it does feel like to some extent market cycles, I don't know, especially when they dip back, that we recover much more quickly. I don't know, maybe I'm just reading wrongly into something. But how do you see it if we do ultimately hit a recession? We're watching Germany, right? Europe's watching it in terms of kind of getting very close to that point. Do you think it is something that is protracted, or who knows?
One of the reasons why it seems like we recover more quickly off of rough periods or bear markets is that while the Fed may not admit it, they are more responsive to market conditions and market behavior. And so we've tended to see the Fed come in more quickly and more dramatically to try and provide liquidity to markets, and which begins the healing process. And we're sort of headed toward the other end of the telescope there now. The Fed feels there's too much liquidity in the system, and the inflation numbers bear that out. This year, the way in which they withdraw that liquidity is going to be key to the market being able to continue to push through. Like I said, it's going to lead to volatility.
Yeah.
Inflation's not going away, but we're starting this Fed tightening cycle from deeply negative real interest rates. So there's a way to go before policy is actually restrictive on credit and the economy.
Well, when do you know when that is? And again, that's another timing question, but you did tell our producers that the first Fed hike is not a problem for equities. It's the last one that's the trouble. So just in 30 seconds, what do you mean by that?
Well, just that at some point, as the Fed continues to tighten, they reach a tipping point where they begin to lead to money being costly. The price of money goes up and begins to restrict the flow of credit. And that's, the old saying that the, bull markets aren't killed by time, they're murdered by the Fed. Again, we're a long way away from that, but we have to watch the pace of Fed activity here.
And it's not an exact science. The Fed will tell you that as well, that they do it and it takes a while for it to kick in, and it's very easy to potentially overdo it. Hey, Dave, thank you so much. Nice to get your thoughts. Dave Donabedian, he's Chief Investment Officer at CIBC Private Wealth Management, on the phone from Baltimore. All right, folks, it's time for us to head over to our Bloomberg TV team for Beyond the Bell, live on radio, TV, and YouTube. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hodge, Shanali Bass again for Taylor Riggs, counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast partners, Carol Massar, Tim Stenovic. We welcome in our audiences across Bloomberg Television, radio, and YouTube. And Carol, it seemed like, I don't know, a few hours ago, we were talking about the big downdraft on a weekly basis that we're seeing on all the major indices. Right now, we're looking at an S&P 500 up 2% on the day, and now higher on the week. The Dow also higher on the week as well.
Yeah, I do think about the technicians saying, well, we took out some major levels this week on the S&P, the Dow, the NASDAQ. We really have seen some technical corrections. We've seen even more in some cases. So I think it's fascinating to see that buying into the close here as we get ready to head into a weekend, Tim.
Yeah, and it's broad-based, too, of the S&P 500 companies. 441 in the green right now, only 63, Caroline, actually negative on the day.
And the flip reverse that we see on the day in terms of tech having been the laggard, today the outperformer, energy having been the underperformer on the day and having been the outperformer of the year thus far, it really does feel like a round trip. It's one of those times, again, that if you've taken this week off, you're going to come in on Monday and be like, what was all the fuss about?
Yeah, and then you got to wonder whether the day after that, whether February is going to start us on the same type of footing as we worry even more about March.
Yeah, and we worry, and look, I think a lot of this, you talk about what we heard out of the Fed. I guess we kind of heard what we expected to hear, but there's still some concerns about how fast they go, how aggressive they're going to be, and how long this rate tightening cycle actually lasts.
Well, as Dave Donabedian, who we just talked to at CIBC, says, it's not the first Fed rate increase we worry about, it's the last one.
All right,
that really gets us into trouble.
All right, let's take some time to walk through these numbers here because it is a pretty wild day here. The Dow Jones Industrial Average, which is actually for a good portion of the day in the green, is going to finish there, up about 1.7% on the day. I'll give you the points, 565 Dow points higher here on the day. The S&P, and it's going to finish higher on the week by about 1.3%. The S&P 500, which was in the red, is going to close higher by 2.4% and is now higher on a weekly basis by 0.8%. The NASDAQ Composite right now up 3.2%, roughly 3.1% on the day, and that's going to give it, push it into the green. I just had to double check that. Push it into the green on the week by less than 0.1%. And the Russell 2000 higher on the day by 1.9%, Carol.
But what a turnaround. Really dramatic. I'm looking at the VIX today, down 3 points here. So in what's been a very volatile week, to see that come down, whether or not you think it's an important metric to watch, Shanali, nonetheless coming down.
Yeah, it's so interesting because when you look at the sectors, there was really only one in the red today, and that is the energy index, less than 1% lower on the day. That was really the best sector of the year. So one day's move doesn't reflect what we're seeing for the year yet. Higher on the day is information technology, real estate, and communication services. Let's see where they continue to go from here.
I mean, utterly extraordinary when you look, Carol, at the best day for the S&P 500 since June 2020.
Yeah, it's pretty wild. And I just think about what we've seen in this month of January. We're going to have a big economic report next week, and we'll see how that changes the trade. But nonetheless, quite a turnaround. Got to get to some gainers. No surprise. I did not put Robinhood, although I maybe should have, because I found that was interesting. The wide swing that we saw on that one and ending up in the red, up in the green, excuse me. Had to put in Apple, up about 7%, pretty much closing out its highs today's, top in the NASDAQ 100. We know the quarter, we know the numbers, and Wall Street also impressed that Apple continues to be able to maintain its supply chain. But when it comes
comes to supply chains, we expect Apple to be able to do that. Want to mention Visa. I know we've talked about that a lot this week. A great read on the consumer, a lot of spending happening. That stock ending up at its highs of the day, up almost 11% for the trade. And I just wanted to mention Peloton just because it was up another 7%, still down about 30% so far this year and way down from its high. And it did hit a 52-week low earlier, right, Tim?
It did. It just shows the range that we saw with so many stocks today, from a 52-week low to up 7%. Hey, I did manage to find some decliners despite the fact that we saw broad-based gains, especially late in the day today. Let's start with Western Digital. Shares finishing the day down by more than 7.3%, actually down for a 9th day in a row, hit a 52-week low today. Shares fell after that third quarter forecast that was below expectations, hurt by supply chain issues, and we saw some lowered price targets in the wake of that from Morgan Stanley and Citi as well. VF Corporation, the parent company of the North Face, also owns Vans as well as others, down 6.5%, cut its revenue outlook for the year amid a slowdown in activewear and international, with particular weakness in China. That was of concern. And then I wanted to highlight Boot Barn Holdings, down more than 9.7%. It did have quarterly revenue that topped analyst projections. UBS, though, said it's concerned about growth sales rate slowing in fiscal 2023, and that's going to weigh on the stock and, quote, prevent its outperformance, Caroline.
I mean, outperformance. Let's talk outperformance for a moment. The dollar on, I think, the best week that it's had since June. The dollar index pushes higher. It means that the Kiwi, the New Zealand dollar, off by 0.6%. We're seeing the Aussie dollar off by 0.6%. This is a story of dollar strength as the Federal Reserve turns more hawkish. That means that it's actually been a very painful trade if you're in metals. Today, copper was off by about 2%, iron ore off by almost 5%. But on the day, the big moves were also in natural gas. Look at what's happening. Up 8% in the US traded natural gas. Those are some moves we're used to in Europe at the moment because of the ongoing uncertainties regarding Russia and Ukraine. But in the US, it's higher on the back of this freeze that we're about to get, of course, across the East Coast. Brent crude also up 1.25%. We're at $90 a barrel now in oil. We're going to see WTI at $87. We've got to talk more about this absolute tear that oil has been on. Meanwhile, of course, sovereign bonds, a mixed picture, but I know, Romain, you're looking at the US yield story.
Yeah, I mean, you got to talk about what we saw, particularly on the short end of the curve with the 2-year yield rising by about 17 basis points here from where we were last Friday, even more than that if you measure it from Monday. Remember, on Monday, we were like something like 97 basis points here. What's interesting, though, is look at the moves that we saw on the 10 and the 30-year yields here. You got 3 basis points on your 10-year and about 2.5 or so on that 30-year. And this is some of the concern that some folks are raising here in the market. The idea here about where the yield curve is going. You got a 2-10 yield curve that flattened out to about 61 points this week, and the 530s flattened out to about 47 basis points here on this week. So it's definitely something to keep an eye on. We generally expect that flattening when you start to get this kind of communication out of the Fed, but there's also the expectation that you're going to get a sharp steepening. The question is, when does that come?
Right, exactly. That's the big question. And this is something we have to keep an eye on, because if you think about it in terms of higher rates, right, mortgage rates go up, a lot of things get a lot more expensive. And so that does start to impact economic growth. And at a time when you're getting so many people from Wall Street, right, weighing in, like, do we get 5 rate increases? Do we get 7? Is every meeting a live one, and do we happen? I think there's a lot of questions because...
Do you think this has a material impact on things like people getting mortgages, people getting auto loans? Do you think that the rate increases are going to be that material?
Yes.
I do.
Of course they are. I mean, they've been warning that this would be material since last year, early last year. So now the chicken is coming home to roost, isn't it?
Is it just one chicken?
The chickens. The many chickens.
That monthly payment people look at, right? And a few dollars can mean a lot to a lot of individuals.
And what about all these like buy now, pay later places? Like, I never understood how that works. So, is there like a variable rates on these things or not?
Well, you know, what is variable is the rate on your promotional CD, whereas savings really start to get exciting ever again as people start to get worried once again.
CDs.
Hey, one thing
those flush of offers.
I'm really looking forward to next week in terms of hearing from Amazon, because we talk a lot about the health of the American consumer and the health of the international consumer. Amazon stock has really not performed well of late. Last year, especially, it's down about 20% from its highs last year. But we'll get a read on the consumer from Amazon and get an understanding of how the company is thinking about the economy next week. That's coming on Thursday.
But also business sentiment, right?
Yeah.
Amazon, Romain's pointed out so smartly, Amazon for the first time is likely to show that the retail part of their business is now, sub 50% of the overall take in. It's more about the web services. It's more about what businesses are spending on getting out to the consumer, the digital spend.
Yeah, I think this is going to be the first time that we've seen their annual revenue for retail, for that retail business, be less than 50% of their total revenue.
And we have PayPal coming up next week also.
PayPal.
Their relationship to Amazon and how they make money through that relationship will also be interesting. Do you need one of those tech giants on your side to make money in payments?
Do you think that, like, I saw some other names up there, it was like Meta Platforms, Facebook, whatever we're calling it here, and even to a certain extent Alphabet, do you think they have the same impact on the market that they used to?
I think that is so smart. Like, I think about Apple in particular. I think there was so much going into this that if Apple had a good report and to see what kind of market reaction, that we got to at Carolina, if Apple couldn't turn around the market, basically nobody could. So I do wonder, on a day where Apple, the earnings were good, the stock did well, the overall market ended up higher here on this Friday. Like, what do we read into that? What does that mean?
Celebrated Apple. And indeed, I hear there's a celebration going on Sunday. Is there, Tim?
Oh, yeah, it's my birthday. Thank you.
Tim, wow.
Yeah.
Snowy birthday for
What are you, turning 30?
No, more than that, closer to 40.
You're going to get crypto for your birthday?
No crypto. no
Dogecoin,
crypto.
maybe?
Just going to hang out,
would be
maybe
buying the
maybe
dip.
do some
Have you seen,
sledding.
I'm looking right now at Carol's Twitter account, and she posted a picture of this puppy. It's like the most adorable thing in the world. Where did you find it? It's like, of course, Carol would have like the most perfect. You have like the most perfect.
I know that dog. We don't have.
It's just
I guess
out
you're
on
gonna
the
have to go
yacht
to Twitter
with
to
this
see the picture
beautiful
of this
little
dog.
puppy.
He's really cute. He's really cute.
And Tim, are you doing anything special?
Maybe going sledding if this snow sticks.
Okay.
Wouldn't that be fun?
Anybody going to go sledding?
You get to take your
why
puppy
not?
sledding?
Let's all go sledding.
Okay.
We don't spend enough time with each other.
You've got an expensive puppy to look after, Romaine. You cannot go sledding.
Yeah, don't you know how much this thing costs?
Romaine, you need to post your puppy. All right, they're telling us
I
to
don't
wrap.
have it yet. It's in transit.
It's in transit.
There's been supply chain issues.
To be continued. Supply chain.
Keep your eyes on
it'll be
Twitter,
here
folks,
tonight.
for Romaine's
My wife's
dog
on the case.
content.
We just don't want to leave, but we do have to get closer to the weekend. We're all ready for it. All right, that's going to do it. Everybody have a good and safe weekend. Watch the snow. Stay safe in it. That's going to do it for our cross-platform coverage Beyond the Bell on radio, TV, and YouTube. We'll see you again, same time, same place, come Monday.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Happy birthday.
Thank you. I was just thinking it's such a
Almost.
difference a year makes, right? Last year we were waiting for vaccines, kind of like
Do you
driving
remember?
ourselves into work, but yeah, this year's a lot different.
All right, well, happy birthday.
Thank
kiddo.
you.
All right, we're going to continue, though, here on Bloomberg Business Week. Right now, we do want to get a check on world and national news. Over to Nancy Lyons. She is in our D.C. newsroom. Take it away, Nance.
Thanks, Carol. The nation's top defense officials say the forces that are on standby in Eastern Europe have not yet moved, and they say the goal is not to threaten Russia, but to reassure allies that Russia will not threaten them. Bloomberg's Irv Chapman has more from Washington.
Ukraine has 44 million people, several large cities, and the prospect of substantial casualties if Russia decides to move in with its formidable military force. Chairman Mark Milley of the Joint Chiefs of Staff said.
This is larger in scale and scope, and the massing of forces than anything we have seen in recent memory. You've got combined arms formations, ground maneuver, artillery, rockets, you got air. There's a potential that they could launch on very, very little warning. That's possible.
General Milley said the United States has zero offensive weapons in Ukraine. In Washington, Irv Chapman, Bloomberg Radio.
President Biden is in Pittsburgh, where he's been touting the recently passed infrastructure law. His visit to the city is timely since a busy bridge collapsed there today, injuring 10 people. Biden says it's one of 45,000 bridges in America that are in need of repair.
We got to move. The next time, we don't need headlines saying that someone was killed when the next bridge collapsed.
Biden did stop by the scene of today's collapse and called it remarkable no one was killed. Nearly 73 million people are under winter storm advisories as a nor'easter is heading for the East Coast this weekend. Boston Mayor Michelle Wu says residents there need to take the storm seriously.
This has the potential to be a historic storm, a huge one.
Wu has declared a snow emergency and has urged residents to stay off the roads. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Masser along with Tim Stenovic here in our Interactive Broker Studio. This is an interesting story out by Dow Jones Wall Street Journal.
Yeah, a lot of people are talking about this one online. New York City is going to require employers to list the minimum and maximum salaries on job postings starting this spring. It's a mandate that's already drawing opposition from business groups. This story from the Wall Street Journal, Dow Jones, by Chip Cutter.
This is wild.
Isn't it wild?
So nearly every employer hiring in the city would be covered by the law. Only those with fewer than 4 employees or staffing firms hiring for temp workers are excluded. Companies that don't comply could be fined or face other civil penalties. And it's all about providing more transparency on pay. Latest step in a broadening of pay disclosure requirements that are also being implemented in states like Rhode Island and Connecticut. And this is happening when we've got this wicked labor shortage in the U.S., and it could give employees even more leverage when many already have an improved position in job options and negotiations. You do think about, will companies kind of rise up? So if they say, hey, I can go across town and get this, will they match, or will they be like, see you later?
That's probably, I think there probably will have pressure on matching them, and it will cost them more to get employees, and perhaps comp will go up, and that's perhaps why some business groups are opposed to this. It comes after a similar law in Colorado went into effect last year. Some firms that employed people wouldn't actually put that they would say that remote jobs were closed to people living in those states, so then they wouldn't have to disclose what the salaries were. Yeah, and that got a lot of attention. Hey, I want to talk to you, just in the last 30 seconds that we have talking about this. A few years ago in the journalism industry, this spreadsheet went around for New York City media salaries, and people anonymously put their salaries in, where they worked, what their experience was. And it led to a lot of people, really understanding what they should be getting paid somewhere, what they shouldn't be getting paid somewhere. And I can see why this would be a good thing for workers.
Did it make a difference?
Huge difference.
Did it result in higher wages?
Oh, I don't know if it resulted in higher wages, but it created transparency.
Oh, that's true. Transparency, always a good thing, at least I think. This is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. What a week behind us. The Dow this week up by 1.3%. The S&P up this week by 0.87%. S&P up 105, a gain of 2.4% today. To be clear, a lot of those gains really came in the final hour of trading. The Dow up 564, up 1.65%. Nasdaq up 417 for Nasdaq. That was a gain today of 3.1%. 10-year up 6/32, 10-year yield 1.77%. Spot gold down 0.4%, $17.90 the ounce. And West Texas Intermediate crude up 0.7%, $87.26 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, Tim Stanovic, you are listening to Bloomberg Business Week at Bloomberg Radio. So I have to say, I love the first line of a recent essay that was written by our next guest. 2021 is the year our relationship with work changed forever. This is something I agree that we're going to be looking back 10 years from now and saying this is when it all started to change.
Yeah, the question is what changes stick, and to what extent do we go back to the old normal? Hey, those words were written by Dan Shapiro, the Chief Operating Officer of LinkedIn. He joins us once again on Bloomberg Business Week on the phone from Palo Alto, California. Dan, how are you?
Good. How are you?
Hey, we're doing pretty well. It's really great to have you back, especially after such a wild year when it comes to the way that people feel about work and the relationship and the changing relationship that they're having with work. You write about something that you call the Great Reshuffle. What is that?
Well, the Great Reshuffle is this idea that right now more people are reconsidering what they want to do in their jobs and what they want to do with their careers than any time in recent memory. We ran a survey at LinkedIn that suggested that 59% of professionals in America in 2022 are going to rethink what they want to do. And what's interesting is that is happening at a time when there hasn't been a tighter labor market for professionals in recent memory. The economy is growing again. There's a massive imbalance in supply and demand for digital skills. And what that means is that as we come out of this pandemic period, as the world becomes more endemic and companies reconsider their policies for how they're going to work in this new world, that employees have a much stronger voice than they used to in this resetting of expectations. So it's going to be a really interesting year.
So I do wonder too, though, Dan, I feel like the pendulum can swing big time, and workers it does feel like they are in the driver's seat right now as so many employees, pick your employee, they're all scrambling for workers. So employees in many ways can set their terms. Does that stick when the labor market corrects itself and a more normal labor market is back with us? Do workers continue to have that leverage and that power?
Only time will tell, but I think there's reason to believe that digital skills in particular are going to remain very tight for the foreseeable future. If you look at what's happened over the last few years, we were already on this journey around companies going through this idea of digital transformation, really digitizing their businesses. And the pandemic only accelerated that. If you think about the expectations consumers have now about what they expect when they interact with a restaurant or a retailer, it is a much more digital experience. And that's placing more and more burdens operationally on the companies that need digital talent to make those things real. So that is likely to continue for quite some time. And that will likely drive some of the policies and practices that many companies adopt. So I think that there's some real staying power here.
What about for elements of this that don't stay? Do we, we're already seeing companies call their workers back to work right now. But we're seeing some shifts. Carol and I talked about Apollo for private equity employees offering that 1 month of remote work. That's something that, Carol, you've covered this stuff forever. That was unthinkable a few years ago, right?
Yeah, exactly. It's really fascinating to see, even the financial firms have been pushing back, saying, okay, you can work from home.
So, Dan, where are the things that go back to where they were before? What are the changes that don't stick?
I wish I had a crystal ball. I think that the thing that is most resonant with employees right now is this concept of flexibility. Yeah. People are happier. They report being happier when their jobs are more flexible. You see that looking at remote jobs is something that, if you looked at all the jobs on LinkedIn and how many people were viewing different kinds of jobs, just a few years ago, less than 10% of the jobs were remote eligible that people looked at. That number is now 40%. 40% of all the job viewing is people curious about remote roles. And so I think that the idea of flexibility is something that has staying power. Exactly where the lines are drawn about what kind of flexibility works, such that businesses can meet their needs and the teams can be functioning. Right. I think that's going to be something where everyone's watching everyone and time will tell.
You know, I recently caught up with the CEO of Cisco and Chuck Robbins, and even he conceded, and a company like Cisco, they have been doing hybrid work, you know, for years pre-pandemic. That's just the way many in the tech industry have been working. But even he acknowledged being a little surprised at how innovative everybody really could be during the pandemic. Technology has made that much more possible. Like I think about, you know, as much as we make fun of all the Zoom calls and things, you really can almost feel like you're with people.
Yeah, I think we're going to see a tremendous amount of technological innovation in this space. Every leader has likely gone through a journey of being skeptical about how teams would operate when they were from home or in a hybrid capacity, and things have worked in a lot of ways better than expected, and that is coming at a time when there's more investment from software companies in trying to make this better for people. So as those things come together, I think there's a lot of optimism, at least I hold, that these working styles will be effective, but exactly where we land, I think is going to be something we'll have to see.
Do you think, Dan, honestly, anything is lost without being in person with one another? Because I do.
What I can say is that we have, on occasion at LinkedIn, had opportunities in a way that was safe and in compliance with health guidelines. We've had opportunities for some teams to spend time together in person, and it is like a spark of energy. Yeah. It is a breath of fresh air. People love having those moments. Now, whether that becomes something people do more periodically as opposed to every day, it's interesting. But I think you will continue to see the power of being together and creating connection as being really fundamental to how great teams work.
Yeah, I agree. There is something about seeing members of our team, especially as we come back after being home for so long. Hey, Dan, we're going to come back and continue with you. Dan Shapiro, he is the Chief Operating Officer over at LinkedIn. They really have such a great front row seat in terms of what is going in real time happening to the labor force.
Yeah, I want to hear more about the types of jobs being offered. Also, the position that employees find themselves in right now, the leverage that they have going into 2022.
Salary trends.
Yeah, exactly.
What are we seeing? Ka-ching, ka-ching. You're listening to Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. We're going to get back to Dan Shapiro. He's the Chief Operating Officer at LinkedIn. We'll get to him in just a moment.
Yeah, we're going to talk all about what's going on with employment in 2022 and continue our conversation. In the meantime, a check of what's going on this trading day. Here's Charlie Pellet.
Hey, thank you very much. We had a late day rally. Final hour of trading saw big gains for the Dow, the S&P, and NASDAQ. S&P on the week up by 0.8%. The Dow this week up 1.3%. And in 3 weeks of losses, we had the S&P up 105 today, gaining 2.4%. The Dow rallied 564, up 1.65%. NASDAQ up 417, up by 3.1%. 10-year up 630 seconds. The yield there 1.77%. Spot gold, though, down 0.4%, $17.90 the ounce. Bitcoin surging 4.7% right now. 37,888 on Bitcoin. West Texas Intermediate crude up 0.8%, 87.27 a barrel. Ahead of the big storm in the Northeast, natural gas rallying 9%, 466 per million BTUs. Stocks advanced at the end of a week that was marked by intense gyrations. As strong earnings from Apple lured dip buyers. Apple today up by 7%, overshadowing fears that the Fed will have to act aggressively to head off the fastest inflation since the 1980s. Dave Donabedian is Chief Investment Officer at CIBC Private Wealth Management. He says stocks have lost a lot of tailwinds.
The Fed is marching toward rate hikes. There's not going to be any more fiscal relief packages coming. And earnings are coming in fine here on the fourth quarter reports, but we know they're going to slow this year. So those tailwinds just aren't as strong. And we started from a level of fairly high valuation. So a bit of a pullback is not terribly surprising.
Donabedian, of course, interviewed right here on Bloomberg Business Week. Peloton Interactive shares up today by 7%. Peloton is being sued by a former sales representative who says the company forced employees to work off the clock without paying overtime and set sales quotas impossibly high. Recapping, 10-year yield 1.77%. Stocks rallied. S&P up 105 today, a gain there of 2.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. I want to get right back to Dan Shapiro, Chief Operating Officer at LinkedIn. He joins us once again on the phone from Palo Alto, California. Dan, eager to talk to you about this story that we highlighted a little earlier in our broadcast about New York City requiring employers to list the minimum and maximum salaries on job postings. That's going to start this spring, according to the Wall Street Journal. It's getting some opposition from business groups. Can you talk a little bit about the way that being transparent with these positions when it comes to salary can empower workers?
Absolutely. Well, it's a broad trend. The trend towards salary transparency has been happening for years, and I think one of the guiding principles behind it is that there's evidence to suggest that it helps remove bias in the process. Some people of different backgrounds negotiate differently, and oftentimes the transparency that you can bring to the conversation yields outcomes where there is less bias in terms of pay. And so I think that's one of the things that's driving it, and it's something that we think is a positive.
Are you seeing more companies post on LinkedIn those salary ranges for jobs that are being offered? Like, do you have any data that shows that the trend is happening on LinkedIn too?
I don't have any data myself right now, but I know it's a broad trend that's going on in the industry.
So it is.
I mean, the other thing that's going.
Yeah. No, please continue. Please.
I was going to say the other thing that's going on is obviously we're in an increasingly inflationary environment, and companies are trying to figure out how that's going to play out in their compensation packages, and particularly as it's a tight labor market, workers are asking questions around what does that mean for my pay? And similarly, companies are grappling with, as employees are working in different locations in the same job, how do they reconcile whether they pay different amounts in different cities for similar work? So what we're going to find as we enter into 2022 is a world where executive teams are going to have to think through pay policies as one of the core questions that they ask themselves.
Yeah, that's an interesting one because, we've seen over the last few decades, Americans just don't move around anymore. And this flexibility of being able to work at home, if you think about it, even on a global scale, you could kind of
potentially work anywhere, raise your family anywhere, and maybe work for any company. I mean, that's kind of mind-blowing, Dan, if you think about that.
It's opening up a lot of opportunity for people. And honestly, it's opening up a lot of opportunity for companies that are able to adapt to these new working styles and tap into labor pools that weren't possible in the past. So I think this is like any moment where the rules are changing, there are going to be winners and losers. And I think companies and people that adapt to the new norms are going to do quite well.
Well, and so that's something I want to just push you a little bit, because there are companies that are like, yeah, this is just a temporary thing. Do you think they're wrong in thinking that? And those companies that don't embrace more flexibility in their workforce where they can, will they be left behind? Will they be penalized?
I think that flexibility is here to stay. I think what that means in a given industry or for a given company, I think we'll learn over time. But the reason that flexibility, I think, is here to stay is because there continue to be core talent in digital areas, technical skills that are going to remain in incredibly high demand. And those are some of the loudest voices that are asking for this kind of flexibility. And so until we see a market where those dynamics aren't in play, I think flexibility in some form is going to be part of our future.
Dan, I'm wondering about what you think about how employees can help shape the future of their workplace. If somebody's listening right now or watching us right now, what advice would you give them about how they can use this as sort of this rare moment in the history of U.S. work to really shape the workplace how they want to see it?
Well, I would encourage everyone to think about what it feels like to be a manager right now. It's a hard job to be a manager. The playbooks that you probably learned over the course of your career to connect with your team, to help them learn their job, to onboard new employees, it is a very different environment than we had just a few years ago. And so I would start, if I were at a, if from a company perspective, think about the roles that your frontline managers are playing, interview them, listen to what they're going through, and help bring them tools and frameworks to help them be successful. Because the greatest companies and the greatest employee cultures often are built off of exceptional frontline managers. And I think that's a place where every company can focus.
All right, we're going to leave it on that note. Hey, so nice to catch up with you, Dan. Thank you so much. Have a good weekend. Dan Shapiro, he's Chief Operating Officer at LinkedIn, on the phone from Palo Alto, California. This is one of the big subjects of our time. And, you know, who knows if we would have gotten there without the pandemic. Maybe, yes, at some point, but it would have been probably much more gradual.
Yeah, and look, it's still, like you said at the beginning of our interview, Carol, it remains to be seen what things look like on the other side of this. But I think what's clear is that companies are thinking a lot differently about talent retention and flexibility.
Well, and if enough employees are saying, I want the flexibility, and if you won't give it to me, I'll find it elsewhere, at some point companies will need to bend a little bit. And I do think about what it means for people being able to move around the country as well as around the world. Pretty cool.
It's really cool stuff.
All right, let's get back to world and national news on this Friday. Here is once again Nancy Lyons.
Thanks, Carol. An investigation is underway into why a snow-covered bridge in Pittsburgh collapsed this morning. Allegheny County Executive Rich Fitzgerald said this morning, fortunately, no one was killed.
Thankfully, at this point, the preliminary reports are minor injuries, or injuries that are non-life-threatening, might be a better way to say that.
Fitzgerald says the Fern Hollow Bridge is heavily used, and 3 to 4 vehicles were on it when it collapsed. President Biden has been in Pittsburgh to speak about the recently passed infrastructure law, and he stopped by the scene of the incident. He says shoring up bridges will be key for Pittsburgh.
I've been coming to Pittsburgh a long time, and as a former Pennsylvanian. But I didn't realize there are literally more bridges in Pittsburgh than any other city in the world.
Biden says the infrastructure law will bring gigantic change to the entire country. The White House is trying to keep Wall Street in the loop when it comes to tensions over Ukraine.
Sources tell Bloomberg News members of the administration held briefings this week with executives from J.P. Morgan Chase, Bank of America, Goldman Sachs, and Citigroup. It's part of an effort to ensure that sanctions on Russia don't disrupt the global financial system. The U.S. and the European Union are honing in on a package that would target Russia's ability to convert currency. Energy penalties and access to the payment system for them are also said to be on the table, but sources tell us that's considered a nuclear option. In Washington, I'm Nathan Hager, Bloomberg Radio.
After After an appeals court found the wrong sentencing guidelines were followed, a federal judge today re-sentenced Tiger King Joe Exotic to 21 years in prison for a murder-for-hire case involving his chief rival, Carol Baskin. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. So, without a doubt, one of my most favorite functions on the Bloomberg is the most read function. And you can dice and slice it as in the last hour, in the last 8 hours, in the last week. If you take a look at the most read for the, go.
I'm telling you, the 1 week.
It's cool, right?
Yeah, it tells you exactly what everybody's interested in on the week here. And I know what you were going to say, Carol. Is it 1, 2,
keep going,
3, 4, 5, 6? Is that 6 or 7?
Yeah.
Of the stories of the most read stories in the last week were markets wrap stories.
Yeah, and it makes sense in terms of what's been going on in the markets. And then you have a story about Jay Powell, what they did, and just huge, just looking at the interest rate market. So that's for the week overall, which makes sense if you take a look at how the week played out in terms of the financial markets, a lot of volatility. And then to see even on this last day of trading, there was a lot of days where we saw in that last hour or so a reversal in terms of the patterns.
And here's what's so remarkable about this week, Carol, is that we saw tech was the star, right? In the sense of not necessarily the star of the outperformer. Tech was the star in the sense was every day it was the biggest mover.
Yeah, that's a good point.
It was also the most volatile.
Right.
So for the NASDAQ composite to finish the week flat shows the wild gyrations that we had.
Yeah, exactly. And we heard from a lot of big tech names: Apple, Intel, Tesla. We're going to hear from a lot next week.
Yeah, we got Meta, we got PayPal, we got Amazon, we got Facebook,
Google. Did you say Google?
No.
Okay.
I don't think so.
I'm trying to keep track. So it's really wild to see in terms of what everybody's reading. The other thing, if I look at in the past 1 hour, the bomb cyclone threatens to wall up New York City, Boston with heavy snow. I mean, that's the other thing. Everybody's just kind of keeping an eye on the weather and seeing what will happen.
So how much snow are we going to get?
We could get like 6 to 10 here in the New York metro, depending.
All right.
Does the storm go out to sea?
Get your snowshoes out.
I love snow. Going to walk the pups in the snow.
Get their snowshoes out.
All right. So anyway, everybody's been reading about the markets this week. Go figure. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. What a week. On the week, the S&P 500 index up 0.8%. The Dow today advanced. On the week, the Dow was up by 1.3%. NASDAQ on the week higher by 0.01%. Stocks rallied at the end of a week marked by intense gyrations. Strong earnings out of Apple managed to lure dip buyers. Apple today up by 7%, overshadowing fears that the Fed will have to act aggressively to head off the fastest inflation since the 1980s. S&P up 105, up 2.4% today. The Dow up 564, up 1.65%. NASDAQ up 417, up by 3.1%. 10-year up 0.7%, 1.77%. 10-year up by 30 seconds, I should say. 10-year yield 1.77%. Gold down 0.3%, 17.91 the ounce on gold. West Texas Intermediate crude up 0.8%, 87.30 for a barrel of WTI. Goldman Sachs CEO David Solomon is tied with Morgan Stanley's James Gorman for the title of Best Paid CEO at a major American bank after getting $35 million for 2021. And briefly, looks like we made it. Barry Manilow keeping his music on Spotify's streaming service, refuting rumors on social media after Neil Young pulled his songs from the company. I'm Charlie Pellet. That's a Bloomberg Business Flash.
I thought you were going to serenade us, Charlie. Oh, I guess we lost him.
Yeah, that's okay.
All right. So speaking of music, this is something for all you music buffs and collectors. There's a chance to own a piece of music history. It could be a Keith Richards signed Gibson guitar or the bass guitar played by Paul McCartney at the Apple rooftop concert. That would be so cool.
Not just classics in there. There's some stuff from BTS as well. Hey, let's talk all about it.
That's kind of your jam, right?
Yeah, a little K-pop. You got it. Hey, let's talk to Martin Nolan, Executive Director and CFO at Julian's Auctions. Martin's with us once again on the phone from New York City. Martin, how are you?
I'm doing very well, thank you. I hope you guys are as well.
Yeah, we're doing well. We're doing well, bracing for the snow. Hey, I wanted to talk about the Julian's Auctions Music Cares Charity Relief Auction because you've got a great celebrity lineup, not just of memorabilia and artwork, but you got some wardrobe in there, you got some instruments in there as well. What's it benefiting, and what are some highlights from the from what's being offered?
Yeah, 40 items going on the auction block this Sunday, and it's for Music Cares, which is the charitable component of the Recording Academy. So they help musicians with assistance in times of needs like paying bills or addiction recovery or preventative care. So this is an auction where you have musicians that have made it mega successful. They're giving back and helping other musicians that may not have had that success or in times of need where they're down, have some challenges. So this is a real feel-good factor. It was supposed to be tied in with the Grammys scheduled for this weekend, which has now been postponed to April. But we're going ahead with the auction because already people have placed a lot of bids. And as you said, really cool items. Carl, I heard you talk about Keith Richards' guitar.
Yeah.
Not only is it the guitar signed by him, but he did a video of him signing it, and then he minted an NFT, a non-fungible token. This is our first foray into the NFT world. This is sort of a hybrid because you get the guitar signed by Keith Richards, and you get the video of him signing it as an NFT. So that's very exciting. But all the greats are represented. The Paul McCartney Hofner bass that you mentioned, yes, he did play a Hofner bass, violin bass guitar on the rooftop of Apple. He is not selling that, however. This is a similar type of instrument that he always plays this violin bass guitars. And so he donated this, he signed it, and already it's up to 25,000. So people still want to own something from Paul McCartney, even though it's not the original one.
Still cool.
Still signed by Paul and donated by Paul.
Martin, you said that there's already been a fair amount of activity. The live online auction is Sunday, right, January 30th. What are you seeing so far in terms of what people are interested in?
Yeah, so, so diverse auction because you have artwork and jewelry and instruments and items of clothing like the BTS outfits are 45,000 right now for the 7-boy band. They're selling the suits they wore when they performed at the Grammys last year live from Seoul in Korea because they couldn't travel because of COVID, as we all know. So they're really cool. And in the pockets of those suits, we found 3 rings. So we're selling each of those rings individually as well. And they signed a Gibson guitar, all signed by the band members. That's really cool. Dolly Parton, you know, Dolly is a fantastic, a legend. She was honored by Musiceers in 2019, Person of the Year. The dress she wore on the red carpet for that event, she donated that with the mannequin, the custom mannequin that is used for the fittings for Dolly Parton, and that's at 25,000. And we can't forget about Joni Mitchell, who in fact is being honored this year as the Person of the Year. And she has this really beautiful painting. It's a signed artist proof. It's a print of her Jimi Hendrix painting with the fire and sort of a reflection on the Monterey Pop performance that he famously gave. That's a really, really cool piece as well, coming directly from Joni Mitchell, who we all truly love.
It is so much fun to go on the website because you can see the bidding and where it's up to at this point, Tim.
Hey, talk a little. Martin,
Yeah,
talk,
it was fun.
Yeah, talk a little bit. It's interesting because yesterday we spoke to we talked about yachts yesterday and the idea that demand in 2021 for yachts, and we're talking super yachts, $50 million and above, was just off the charts. Give us an idea of demand for memorabilia like this, and to what extent you saw how you saw sales in 2021 and how you expect them to be in 2022.
Yeah, so 2020, with the start of COVID, was a record year for us. 2021 was even a better year. And already starting off in 2022, we're seeing a huge amount of interest in people bidding in auctions, coming to our website, wanting to own something tangible. And now we're also looking at the intangible digital collectibles with NFTs. So yeah, it's truly off the charts. People have money and they're looking for stuff. They're looking for the cool factor. And they're also looking upon these collectibles as a form of investment. And obviously we know that the stock market has been very volatile so far this year in 2022. And so people sometimes are taking some money out and saying, okay, let me take a little bit of profit off the table and buy a guitar or buy a piece of art or a piece of jewelry or even handwritten lyrics. Bono's handwritten lyrics in there. Eddie Vedder has some really cool handwritten lyrics as well. So yeah, people sort of, they're divesting a little bit from the traditional investments and owning the cool factor.
Hey, Martin, just got about a minute or so left here. In terms of NFTs, you're someone who's been in the auction space for a long time. You've seen it, and as it's been, changing and innovating. But what do you make of NFTs? How big do you think it will become as a part of your world? And again, just got about 40 seconds.
It's looking to become a very big part. Initially, back in April, when Beatles was sold for $69 million, I was sort of like, I don't know about this, because I'm always talking about the tangible assets of these cool factors like the jackets, the gloves, the shoes, the jewelry, the art, whatever you would own. And now I'm seeing that, yes, there is a demand, especially with the millennials and the younger demographics, Gen Zs. They're not really into collecting stuff, but they still have that collectible desire, and so they're wanting to own something like an NFT. And again, it's a digital asset, a digital investment, a digital collectible. I think it's going to be a future. And in fact, next Sunday or Monday, February 7th, we're doing a full 6 NFTs, one of a kind, for Julian Lennon, talking about items that he was gifted by John Lennon.
Very cool.
So that's going to be really cool, February 7th.
All right, on the website, julianslive.com, you can find out more of all that we were talking about. Martin Nolan, good luck with that auction this weekend. Executive Director, CFO of Julian's Auctions. Tim, there's an Ozzy Osbourne signed leather coat. Current bid is $22.50 if you're interested.
That would be $22,000?
No, $2,250.
Oh, okay. Yeah.
Yeah.
That's cool. Ozzy.
Some really cool stuff.
Really cool stuff.
We made it. What a week.
What a week.
Crazy volatility. We'll see what happens on Monday in terms of the trade.
Yeah, I mean, 2022 not off to the best start in terms of numbers, but this week flat on the NASDAQ and higher on the S&P 500. Pretty amazing.
And got a big Fed meeting underway and some big tech earnings next week. You have a good birthday.
Thank you so much.
Happy. This is Bloomberg Radio.